and is storing it in some place that all other things being in some ways. So when you're looking at these rejections, you have to kind of look at it through that lens. And when BlackRock comes and they apply and they have a track record of like 500 approvals for every 100 rejection, you kind of like the assumption has to be there that they're going to approve it just because, again, history suggests that they will. So when you look at this situation, you're looking, again, a regulator that doesn't want to approve any of this type of instrument. And so they're looking for reasons to reject it. Now, the rejection itself was actually quite weak. To the extent that the Wall Street Journal reporting is true, essentially what they said was, hey, tell us what the exchange is. Give us more details on the surveillance agreement. So that's not necessarily like, oh, no, this isn't allowed. That's like, hey, we want more details. So I think it's great. I think it's actually very funny, and I'm quite curious to see how this plays out because I think that the SEC is in large part trapped, where they'll have to either acknowledge that they just don't want to do this, which they have not yet been willing to do, or on the other side, they'll grant it to someone like BlackRock, and then kind of all the concerns that come along with it happen. So I think it's great, and I'm really into it. What do you think? What do you think, Will?
Yeah, I thought the same thing. Same point with the delay here was kind of odd because normally there's that 75-day comment period where they have to like take it in, digest it, and then they can issue something. And historically, we've seen them drag it out to the end there, and then they reject it. And that's why it's taken so long historically to have these ETFs go through, right? So when we had the BlackRock one go through, we had multiple others also file, Fidelity being the latest one, right? That was a big news item last week, and it was confirmed yesterday. This issue seems to be around the surveillance agreement, according to the Wall Street Journal reporting. And I think that ties back into these market structures where Bitcoin exists on top of, right? So if you think about Coinbase or Binance or Huobi or OKX, the market makers for these markets are typically firms that tie in and start working on the back end and providing liquidity for market to trade. Sometimes, however, these exchanges do that themselves. That was a big thing with the Binance SEC lawsuit that came out the other day, was that an entity that is owned by Binance's CEO, CZ, is market making on top of Binance. And I don't think the SEC likes that. I don't think a lot of people like that in traditional exchanges where your market maker is also owned by the exchange, right? They might think that that's unfair. And so I think that is maybe what the SEC wants here is more information about who's creating this market, where the surveillance is coming from. My understanding is that Coinbase is the one providing this information on behalf of NASDAQ, and that seems to be it. But I think they want more information to be able to move this forward. Zach?
No, I think you're absolutely right. I saw Jen's hand, so I want to get her on the record. What do you think, Jen?
Yeah, I just wanted to say on the flip side of the coin, this atypical situation, Adam and Will, that you brought up could be good that the SEC has responded so quickly. I mean, asset managers now have time to respond to these comments and refile. Previously, it's taken so many days. The entire process takes more than 200 days. And so I think that this atypical situation could mean that there is some change, could mean that there's some flexibility, and could mean that they're willing to work with those that are filing these ETFs. So I don't see it as a total negative sign just yet. And it looks like the market doesn't either. I mean, Bitcoin dipped just below 30K, but it's back up. It's been there for weeks since we've learned about the filing of BlackRock's ETF. And so I'm waiting to see on what's going to happen with this one. Zach?
I'm kind of with you on that, Jen. I think that my gut would sort of be along those lines as well, right? Like BlackRock, I think, is the largest ETF issuer in the world, right? They know the process. And this seems to be part of the engagement process with the SEC, potentially in terms of getting this thing over the line. But it really does boil down to the surveillance sharing agreement, as many pointed out, with the BlackRock application and others. All right, let's change gears. Let's talk about Celsius. Remember them, the bankrupt crypto lender Celsius? We have a little update here in that case. The plan here is to convert all the other altcoins to Bitcoin or Ethereum before distributing them to various creditors. This is interesting, I think, because there is a little bit of subtext here that at least this court sees Ethereum, or Ether, I should say, the native asset of the Ethereum blockchain, as a non-security, as a commodity. That's been sort of hotly contested of late, with Gary Gensler famously dodging the question in congressional testimony when asked if Ether was a security, given his recent comments that pretty much everything except for Bitcoin was a security in the digital asset market. So that's a little bit of the subtext, but certainly potentially some good news, I think, for Celsius creditors. I'll throw this to Adam for his thoughts. What do you make of this story?
Yeah, I mean, I think it makes sense from an execution standpoint, right? Like there's nothing that's more difficult than trying to get somebody to offload 100 different types of tokens that all use a different blockchain and all require a different wallet. A lot of people who are buying assets, again, like don't even really maintain wallets for a lot of this stuff, and they use exchanges as a proxy. Now, obviously, Celsius was a little bit different, but not substantially different. So from a simplicity standpoint, it makes sense. From a market dynamic standpoint, I think it represents some troubled times for some of, especially the smaller tokens that they're holding that will get liquidated. And I'm not even really sure it's in the best interest of the kind of end users who are going to be getting some of their capital back as a result of that. Because again, like a lot of times getting liquidated out, there's taxation, there's tax consequences. Like there's just, it makes it a little bit complicated. So I'm cognizant of that, but I think that it does make sense. And it definitely, again, is an improvement relative to what we've seen in the past, where, you've got, Mt. Gox in Japan, 2013 failure, still finding its way to unwind. And in some ways that's great. Again, like the keeping your crypto as like somebody who's in a coma, that's always a good strategy. But at the same time, the lack of that liquidity can really kind of hurt. So I think this is threading the needle, and it's one of the less dumb things we've seen in the Celsius saga to date. Will?
Yeah, I take a markets angle on the story. To me, the thing that popped out is the fact that Ethereum is being used as a liquidation asset here. All these other altcoins are just going to starve because the liquidity is going to be driving out of them, depending on what is in the Celsius filings as of now, and I'm not familiar with those, but all those tokens are going to be dumped onto the market, moved into BTC or ETH, and that is bullish for both BTC and ETH. I don't know how much pressure is going to put on both those coins, but the fact that we have this big holding of altcoins moving into BTC and ETH means that those two assets as denominators and trading pairs are going to strengthen, right? And that's going to drive down altcoin markets. And we typically see this during bear markets, right? Where altcoin season is far in the rearview mirror. A lot of these coins die. They have no liquidity. People forget about them, move on to different projects. But typically one or two survive and they do well. Historically, that's been Bitcoin. But over the last 3 years, Ethereum has really popped up and been a coin that alongside Bitcoin has been able to withstand any pressures from a bear market. Comparing 2018 and 2022, you can see that there's been a big difference in people's purview of what Ethereum is. In 2018, Ethereum fell by over 90% during that rough time, right? The coin was close to over $1,000, if not over $1,000 during the top of that market. And then it dropped all the way down to $80. This last time around, it went as high as 4,000, and I think it dropped as low as about $800, but it's rebounded to about 1,500 and held its position pretty well. And I think that's because, Zach, not only are the legal rules seeing it as a commodity, but also traders, investors are seeing it as something else than all these other altcoins that are out there. Jen?
Well, you kind of covered the question I was going to ask. I was going to ask Adam, what this means for altcoin markets starting July 1st if all of these coins are getting sold back into the market. But you answered me, so I'm going to pass it over to Zach.
I don't know. Hopefully this provides closure pretty soon to Celsius's creditors. We saw on that little screen grab that at one point, 1.7 million customers called Celsius their home for crypto, which, ouch, sorry guys. So hopefully a bit of closure for them. Again, I think tax implications that Adam brings up about, having these assets being forced liquidated into, arguably more sound assets, but still you take that hit when you're getting those funds back out. But it is interesting to see kind of the bankruptcy process wind its merry way, right? This is something that we're going to see for a number of firms, and Celsius kind of seems to be the one that's actually progressing in the most sane fashion. So this is an update for folks. Check it out. July 1, they're talking with the SEC, perhaps a bit more clarity on whether ETH is indeed a commodity in their eyes following the release of the Hinman documents and more. So anyway, that's it for the first half of the show. I'm going to hit pause, and I'm going to look at these denim shirts that we're wearing, me and Will at least. Maybe Adam isn't wearing a denim shirt, my bad. Okay. Fact check myself on that one. All right, enough of that. When we come back from the break, we're going to talk about Trump NFTs. This time, Melania, they love those NFTs, those Trumps. We're going to talk about that and more here on The Hash. Thanks for being here.
Welcome back. Regulation in the U.S. is a thorny subject. In fact, that's putting it mildly. Many crypto companies are pushing back, but one in particular, known as Prometheum, is taking a different approach and seemingly trying to stand out by saying that the SEC has in fact done enough, even if they haven't themselves yet secured permission to operate, and once they can operate, seem to have no significant tokens that they could actually enable for trade. Jen, why don't you start us off with this interesting story?
This is just like a web that I can't wait to see what part gets untangled next. I think the Prometheum story is really interesting. Aaron Kaplan has been very public on his stance on the crypto industry. You know, he says that if you just treat everything as a security, you won't have any issue with the SEC. He's been on First Mover twice saying exactly this. And the last hearing that he was at, you know, he confirmed that Bitcoin and Ether won't be listed on Prometheum when they are finally available to the public, and that is the majority of the crypto industry. So there's lots to untangle here. You know, of course, there's the conspiracy theorists that feel like Kaplan, is out there projecting a certain narrative. But I think it's also important to hear the other side of the story. And I want to point to this tweet from Preston Byrne, lawyer at Brown Rudnick. He said a few weeks back, Aaron has been working on Prometheum since at least 2015, comes from a family of lawyers that has a law firm in Manhattan named for them and has a view on tokens consistent with that background. There's nothing fishy here. Just nobody noticed him until this week. A lot of responses to this tweet talked about, you know, meeting Aaron at conferences years back, and he's been working on Prometheum, et cetera, et cetera, et cetera. I don't know that the discussion around Prometheum, though, really gets us anywhere with regulation when we look at some of the tokens that have been in some of the previous filings. You know, they're not tokens that are widely traded or even widely known. And it doesn't get us to a place where we actually understand what securities are. You know, some of the tokens that are mentioned in the previous filings, the projects themselves have come out and said, these are not securities. So not only does it feel like Prometheum and Aaron Kaplan are defending themselves against the rest of the industry, but it seems like maybe some of the token projects they hope to deem as securities as they move forward with the SEC, they'll be up against the projects that are actually issuing those tokens. So like I said, a big web, and I can't wait to see which part gets untangled next. Will, what do you think?
I think this guy is playing everyone like a fiddle. That's what I think. He went against the grain, and now everyone has a splinter in their finger and is a little upset about it, but we're talking about them, right? So go back to Preston Byrne's tweet here. He said he's known about Prometheum for years. He's known about Aaron for years. Nobody else in crypto really did, though. But now we do know about them, and we've had them on First Mover twice. They've been on Unchained podcast. They went to Congress and talked in front of everybody, getting so many different follow-up interviews, and that's going to bear fruit, even if people don't like what they're doing right now. So I think this is a very smart media strategy, and I think they're going to continue to push it. They might not even agree with what they're saying with the SEC stuff, right? Like maybe that is something we could take them at face value and say, like, that's what he thinks is the rule of law, and they think it's being fairly applied. But my meta take on this is a firm that is trying to build market fit in a very crowded room. And the best way to do that is to say something that's, you know, uncomfortable to a lot of people. And look how much attention they're going to get. We see the same tactic time and time again with a lot of people in crypto. And a lot of those people in crypto, not a lot of people like, because they're saying things that are uncomfortable and a lot of people don't think they're genuine. But those people often get market fit because they get attention for the first time. So that is my meta take on this whole story. Adam?
Yeah, I think that's an interesting take on it, and I think that it's a plausible take on it. But to me, the explanation here could be a lot more simple. And I think that the telling part about it is that once they actually get approval to operate, they won't be able to list Bitcoin or Ethereum. And this kind of illustrates the whole problem with the SEC's approach, which is that the SEC regulates securities. So if they are regulating an exchange, then that exchange is trading securities. And a security can be a registered security, it can be an unregistered security, but they are fundamentally securities. And the conceit that is acknowledged here, you know, by not being able to list Bitcoin and Ethereum is that not everything is a security. And by nature of not everything being a security, effectively you're separating the world into cryptocurrencies over here, like Bitcoin and Ethereum, which these exchanges will not be able to trade because they're not securities. And then over here are tokens that look like securities, and they will be able to trade, but only with the constraints that are around securities, which include you can't transfer them in many circumstances if it's a Reg D exemption for a year. You can only own them or trade them or do anything with them if you're an accredited investor who has a net worth of over $1 million, not including your primary house or other kind of factors. So like that's the crazy part about it, is that this is actually an acknowledgement that what Coinbase and to a lesser extent Robinhood and other platforms are saying is correct, which is that, hey, even if we do everything that the SEC says that they want us to do, that actually would mean that we would become security exchanges and not crypto exchanges anymore. We would not be able to operate in our current core business, which seems like it's kind of a big problem for a regulator that says that everything fits within their rules. But Zach, what do you think?
Big bad Aaron Kaplan. Yeah, he's certainly everyone's favorite punching bag these days. A lot of spicy commentary around Unchained podcast that Will mentioned with the general counsel from Paradigm. And, the lawyer on that show was basically arguing to Aaron Kaplan and Prometheum that, hey, great, you have a license, you don't have a business. And that, I think, is what a lot of people are commenting on. They're saying, well, you've sort of, sure, you got this special purpose broker dealer license, but you've also entered into a catch-22 where your business ultimately may be harmed by the thing that you think is going to unlock this massive wave of investment. And I think that's a fair point. And I think that's something that people are really locking in on as Prometheum goes out there and says, hey, this is the compliant path for crypto trading in the United States. And people are saying, well, if you look into it, that's not great. You're basically saying that it can't function for the two largest assets in the market, which is a big problem. So, I would definitely check out that podcast. It's a spicy one. The general sort of tone, I think, from Kaplan and the Prometheum crew that the rest of the crypto world is a bunch of scofflaws, as the Paradigm special counsel put it, is rubbing people the wrong way and is fueling the interest, attention, and drama around this story, as Will mentioned, whether that's going to serve them in the long run or not, and simply alienate them from the community of users and potential partners. I think that's probably the big question going forward for Prometheum once it can start to be functional. But hey, who knows? Will, I think you got the last story of the day.
I do. Last comment. You can't get customers if people don't know who you are. And look, everyone knows who they are now. Okay, let's go over to the next story. If you missed out on the first wave of Melania Trump NFT, but you want to buy more, we have a story for you. They're launching the 1776 collection on Solana, $50 a piece at 3,500 unique NFTs celebrating America's history. These NFTs are coming to a market near you. Adam, you purchased a Trump NFT. Would you purchase a Melania Trump NFT?
I don't think so. I think
why? I need to know why. Like, what's the difference between a Donald Trump NFT and a Melania Trump NFT for you?
I mean, I like doing things first, and it was funny. So, like, honestly, like most of my investment decisions in the world of crypto follow this rubric. I will warn you and not suggest that you follow it. but this is, again, like this is a sequel, and there's nothing wrong with sequels. But honestly, it's a sequel to a movie I didn't even really like that much. So I figure I'm going to let other people go after this one. I do think it's the questions that I have when I look at something like this really are, how much is this worth to, like with the last deal, and I assume with this one as well, these are effectively licensing deals, right? Where you have a popular brand that speaks to a certain cohort of people, which is a very large cohort of people here in the US. And people are looking for, how do you get someone involved with NFTs on the Solana blockchain for the first time, right? Polygon was kind of the last one. So it does make sense to go after these things. But my question is, what does it actually pay? What is it worth to sort of the subjects who are licensing their likeness in order to do these? And what do those deals look like? That would be fascinating to find out. We're obviously not going to, but honestly, that's like my big question about this. What do you think, Jen?
Well, there were a couple Melania Trump NFT projects. I went back and did some digging when I saw we were going to talk about the story, because I remember the eyes one, but there was another one in between, and then there was she auctioned an NFT and it sold for a bunch of money, but then a report came out that said it was a wallet that was actually attached to her that purchased that. So Melania's been, being very crypto. Yeah, exactly. Melania's an undercover degen here. And now she has a new NFT collection. I wonder who's going out there and buying them. I mean, they are only $50 and you can get them with a credit card when you click on it. So maybe there are Melania fans who are going to learn a little bit about the Solana ecosystem by buying these. But Zach, I see you smirking over there and I saw your hand up. So I know you probably have a spicy take on this.
First of all, we need to make Will do all the NFT story intros because
I know.
yesterday's
Isn't it fun?
intro was an all-timer. He's like, do you like lawn art and NFTs? We have the story for you. And he just did that on this story as well. So I think we need to make that happen. This is like the future of fan engagement, as like silly as it sounds, right? This is all it is. It's fan engagement. The Trump family has a long history of licensing their likeness to be on various forms of merchandise. This is like us kind of talking about like whether or not like the Trump family like presidential like dinner plate is a really cool thing. We're just NFT and crypto nerds.
Exactly.
So we end up talking about it as though it means something. But really, it's just a tchotchke. And some people want to have a digital tchotchke. Others would rather have it on their dinner table to look at, or maybe in the fine china closet that never opens but has a glass window in front of it. So this is really kind of think what this is. And I think it is something that ultimately supports the long-term use case for NFTs sticking around, right? Commemorative items are a big business. They're not sexy, exciting, or even worth commenting on most times, but they're here for the long haul and they probably bring in a lot of money in aggregate. So the fact that we're seeing this with NFTs makes a ton of sense and actually is bullish that some of these mainstream figureheads are being like, well, yeah, we did it once. Let's try it again. Let's see what happens. And maybe that is going to be like why NFTs stick around, is because people like tchotchkes, even digital ones. Got to give it to Will. Close us out. What do you think about this one?
I got a few thoughts. I'll leave it with the first Trump NFT stack did really well, but when he released the second, it was not great for hodlers of the first one. So perhaps in this case, we see a repetition of the past. I'm not saying short these NFTs, but it's not looking great for any Trump NFT holders out there. The market is looking a little sour. But we can close out there, Zach.
Well, when the Baron Trump NFT drops, guys, get ready. That's going to be hot. There we go. The man is tall. All right. That's it for the show today. That's it for the show this week. We're The Hash. I'm Zach Seward. That's Adam Levine, Jen Sanasti, Will Foxley. Thanks so much for being on CoinDesk TV with us. Check us out as well on the CoinDesk Podcast Network. We wish you a happy weekend. Have a great one out there. Thanks.
Welcome to Forecast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and of course data. This is where we look beyond just the headlines to get you the insights and knowledge that will help you power smarter decisions. I'm Forecast's editor-in-chief, Angie Lau. Well, when it rains, it pours, and it's pouring Bitcoin ETFs, which appear to be the hottest bet in town. Fidelity, the investment manager with over 11 trillion US dollars of assets under management and 40 million customers, is once again trying for a Bitcoin ETF in the United States. On Tuesday, the block reported Fidelity is close to filing its application for a spot Bitcoin exchange traded fund, or ETF, with the SEC. Now, Bitcoin prices jumped briefly to $31,000 on the news Tuesday evening in Asia before retreating. Now, Fidelity had filed for another Bitcoin spot ETF in 2021 called Wise Origin Bitcoin Trust and rejected by the United States Securities and Exchange Commission in January of 2022. So why try again just weeks after the SEC called out crypto in its expansive filing, calling it most securities? Well, Fidelity already sells a Bitcoin exchange-traded product in Europe, which is 100% backed by Bitcoin. That's in Wisdom Tree in just the last 2 weeks. While some experts see this as a sign of rising interest in digital assets, Michael Silverberg of crypto fund Altab Capital says, while ETFs are more convenient for many types of investors, that doesn't make them better. In other words, exposure to crypto doesn't make it crypto. Tuesday also marked the launch of the first leveraged Bitcoin futures exchange traded fund called 2x Bitcoin Strategy ETF, offered by investment advisor Volatility Shares. The ETF is listed on the CBOE in Chicago, the largest options exchange in the United States, under the code BitX. Now, the ETF won't be investing in Bitcoin directly, but is focused on making gains from price changes in Bitcoin futures contracts. All right, speaking of ETFs, customers of HSBC Hong Kong can now trade, Bitcoin and Ethereum ETFs. According to Decrypt, ETFs are now listed on the bank's so-called Easy Invest mobile app that it has for its retail customers. The app offers exposure to Bitcoin and Ethereum futures based on derivative contracts that trade on commodity exchanges. CSOP Bitcoin Futures ETF, CSOP Ethereum Futures ETF, and Samsung Bitcoin Futures Active ETF are now available on the HSBC Invest app, according to the report. All right, now, since we are on the subject of Hong Kong, one of our favorite places, of course, the Special Administrative Region has been moving swiftly to bring regulatory clarity to crypto. We've told you about that. But now this, a landmark ruling from the city's high court has recognized cryptocurrency as property. And some believe the decision could have wide-ranging effects on the regulation and taxation of the digital assets in the region. Forecast's Jenny Ortiz has this report.
Earlier this year, in an unprecedented move, the Hong Kong High Court acknowledged cryptocurrency as property capable of being held on trust. This landmark outcome on March 31st, resulting from a judicial skirmish surrounding the defunct cryptocurrency exchange Gatecoin, is expected to reshape the landscape of digital asset regulation and taxation in Hong Kong. The ruling was given by Justice Linda Chan, who held the view that cryptocurrency ought to be regarded as property because it can be owned, transferred, and has inherent value. In a statement sent to Forecast, fintech lawyer Christy Swartz of DLA Piper said the ruling confirms crypto assets do not exist in a lawless realm and holders of these assets are protected under Hong Kong law. This is echoed by law firm Detchert's Michael Wong.
When you actually buy a piece of cryptocurrency, you can go to the court and enforce your proprietary rights of that currency against whoever. So I think it's a good sign.
Gatecoin was wound up by court in March 2019, with liquidators appointed after a failed attempt to recuperate disputed funds from a previous payment service provider. Following the closure, Gatecoin's liquidators sought legal advice on how to classify the cryptocurrency held by the exchange. The court had to decide whether it should be treated as property held on trust or be made accessible to a general body of creditors. Jason Chan of Detchert told Forecast several jurisdictions have also earlier decided on a similar issue.
This case really follows, a long line of other common jurisdiction cases. For example, England, Australia, Singapore, Canada, and New Zealand, and even in the US, they all kind of already recognizes the crypto as property.
Meanwhile, Swartz added, the Hong Kong ruling is likely to serve as yet another persuasive authority for courts who have to decide on questions relating to property rights associated with crypto assets.
To be honest, I think Hong Kong, in terms of the approaches, I think they're moving in the right direction. And the more regulations they've published, the better for the industry because it provides certainty. It tells people what you can do, what you can't do.
As Hong Kong moves towards its goal to be a global crypto hub, regulatory clarity on what is a cryptocurrency is precisely what's needed. Jenny Ortiz, Forecast.
All right, great stuff there from Hong Kong, Jenny. Shifting gears to Singapore, last week the Lion City Central Bank gave an in-principle go-ahead to payments network Ripple Labs application for payments license. Rahul Advani, Ripple's policy director for Asia Pacific, joins us right now to break down this landmark development for the company and to dig a little in on the details. Rahul, great to see you.
Thank you for having me, Angie. It's a pleasure to be here.
All right, congratulations on the in-principle approval for a major payment license from the MAS. So tell us, what does this mean for Ripple's operations in Singapore and the Asia Pacific?
It allows us to offer regulated digital payment token products and services, which will enable us to better support and scale the use of on-demand liquidity, or ODL, by our customers in Singapore and across the APAC region, and that are looking to explore blockchain and digital asset technologies for their cross-border payment and treasury use cases. With on-demand liquidity volumes surging in Asia Pacific, we know that there's great appetite from customers in the region to engage and explore with blockchain and digital assets. And this obtaining the in-principle approval of the major payment institutional license to better support these progressive customers and scale our ODL services to ultimately build a more inclusive and borderless financial system.
Okay, right. Rahul, so how does Singapore then fit into Ripple's global operations?
Singapore's location makes it a prominent gateway to emerging markets in Southeast Asia, as well as developed markets across the Asia-Pacific region. We're a global business, and we remain hyper-focused on building our teams outside of the US. About 90% of our business is global, and Singapore, and to a large degree, the broader APAC region, is one of our fastest growing regions and remains high on our list for recruiting.
You know, at the start of the year, there was speculation that Ripple's case with the US SEC will be settled by mid-year. Well, we're here now. Can you give us an update on how the legal case is unfolding?
We continue to push for a speedy resolution, and we look forward to proving that Ripple did not violate securities law and that the SEC never provided Ripple with fair notice that its actions would ever be prohibited under the law. The decision timing is ultimately up to the judge. We don't have any control over that.
Okay, lastly, Rahul, I got to ask you about this. Ripple acquired digital assets custody from Mitaco for $250 million. It's $250 million US in mid-May. Can you give us an update on how that integration is going and how does it fit into the global strategy for Ripple?
So acquiring Metaco makes Ripple the leading enterprise solution provider in the space. Both Metaco and Ripple share strong, digital asset and crypto DNA. So this is the first of many offerings as we continue to build and invest in crypto infrastructure.
All right, Rahul, thank you so much for joining us on the show. Really appreciate it. All right, everyone, time for a quick break, but we will check in on cryptocurrencies and the NFT markets when we come back. Stay with us.
Forecast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forecast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forecast has it covered. This is Forecast News.
All right, welcome back to Forecast IQ. I'm Forecast Editor-in-Chief and your host, Angie Lau. It's great to be with you, and thanks for joining us. It has been an interesting week for crypto. We saw Bitcoin hitting levels not seen in over a year, even as ETH, the largest altcoin, gave up about 4% in the last 7 days as institutional interest racks up. So how are market experts playing this out right now? We've got Justin Dathinen, Head of Business Development at Key Rock, and he's here to talk about just that. Justin, it's great to see you.
Hey Angie, thanks for having me on.
All right, let's kick off with Bitcoin ETFs. The first leverage Bitcoin futures ETF, as we said, just started trading this week. What is it exactly? How are futures ETFs different from spot Bitcoin ETFs?
I have a very negative view when it comes to futures ETFs. I think they're very inefficient instruments because there's a lot of infrastructure and cost required to buy, hold, and roll over futures, whether they're done on a monthly or quarterly basis. And so it almost means that by definition, you're going to underperform the price of the underlying. That doesn't require those costs. But of course, the whole point of an ETF is how accessible it is to institutional investors, professional investors, and also just retail if they have access through an app or a platform or a broker, right? When you talk about spot ETFs, they're a lot more complex because there are security concerns, regulatory and compliance concerns that the regulators, at least in the US and in many actually jurisdictions, can't really wrap their heads around, and that's why it's so hard to get a spot Bitcoin ETF.
Yeah, it's interesting to see how institutional players remain pretty optimistic about Bitcoin ETFs, as we've seen with BlackRock and Invesco and WisdomTree, and of course now Fidelity, even as retail investors are still slightly wary. What are these institutions seeing that maybe the average retail investor isn't yet?
I don't necessarily think it's a difference between a perspective on the asset class or the space itself, between retail and institutional investors. I think they just go about the space in a very different way. When you're an institution, you're going after an infrastructure or a product that caters to that market and to investors.
All right, Justin, let's shift away from ETFs. Let's take a look at the markets right now. I really want to talk to you about this. Bitcoin sitting around the $30,000 mark, even though a lot of people predicted that it would be between 25 to 30K for a little while longer. So what's your take?
Sure. So Bitcoin has performed very well in the past 7 days on the back of all the positive news we've had. We might keep on going up if people are still enthusiastic about it and if the macro environment itself remains positive, but things change very quickly in crypto in general, right? So I think it's too soon to say fundamentals are all rosy and positive and we should all be buying Bitcoin. But right now, at least, the fundamentals are definitely very positive, and so there's no reason why Bitcoin couldn't stay or even go higher than 30K.
Justin, always a pleasure speaking to you. Really appreciate it. Thanks for joining us. All right, over to the world of non-fungible tokens, NFTs, as you know them by. Bitcoin Ordinals protocol has emerged as quite a fierce competitor to Ethereum NFTs in June. 4 out of the top 5 NFT collectible sales in the last 30 days were on the Bitcoin chain. And as you know, we track BTC Ordinals on cryptoslam.io. Let's get in our very own Yehuda Pesher to break down that nitty-gritty of the NFT market. Yehuda?
Sentiment across the NFT ecosystem continues to be positive as trader optimism is stoked by bullish crypto news. A majority of NFT trading happens over on Ethereum, where the price of Ether is threatened across the 2K mark. So why am I mentioning crypto? Well, NFTs and crypto are closely tied, but you won't typically see them running together. When crypto is running up or down, NFTs typically stagnate, and that's because the price of crypto affects the price of NFTs pretty significantly. On the flip side, buying an NFT whose price could drop the moment you buy it, well, that's not ideal either, so buyers are also sitting out. Established Ethereum projects, collections like Moonbirds, CloneX, and Doodles have fallen to all-time low points, but even still, NFT traders are feeling optimistic. That's largely because of the art scene and because of some exciting announcements in some of NFT's biggest projects. Azuki's Follow the Rabbit event in Las Vegas last Friday saw the project's founder Zagabond deliver another check your wallet moment. And this year's announcement delivered them NFTs from another new collection called Elementals. The impact of the announcement saw a decrease in Azuki's floor price, but the following days saw Azuki's average sale price increase to one of its highest points since March, when it reached $46,000. The new Elemental collection will likely have an impact on the Forecast 500 NFT index because collectors may want to liquidate existing assets they hold across other collections to get a stake in this new Azuki collection. Plenty of others are having a very rough stretch. That's including the Bored Ape Yacht Club, who continues to see falling prices as the narrative across the NFT community focuses on the collection's falling floor prices. It reached as low as 33 ETH. Large Bored Ape holders like Machi Big Brother and Franklin together have sold over 60 Bored Apes. Other whales are taking their mid-tier apes and they're listing them at the floor, and that's leading to savvy traders scooping them up and quickly flipping them for profits. The discounted price has also led to a new anonymous wallet going on a shopping spree. Some exciting news has taken place over in the gaming world. Gods Unchained arrived on the Epic Game Store last week, bringing the NFT-based card game to a huge new audience. Though to say it's a new game isn't entirely accurate, Gods Unchained is actually one of the blockchain's oldest video games, being born on Ethereum in 2018 before migrating to its current home on Immutable X. That's for scaling purposes and seems like a very wise move at this point. Mythos Chain's NFL Rivals also made new this week as the free-to-play officially licensed NFL mobile game crossed the 1 million download mark. Just as noteworthy is players are averaging 2-hour-long play sessions. These are all remarkable achievements considering it's the NFL offseason, so we'll see how this ecosystem grows once the upcoming season kicks off in September. The history lesson to close things out. So Yuga Labs is publishing a book on the historic CryptoPunks collection, and this book will detail the collection's history as being one of the primary inspirations for almost everything you see in the NFT space today. The book will feature insight from some of the collection's most noteworthy collectors, including Beeple, Def Beef, and Snowfro, although there is backlash among the punks community from members who have been staples in the community and have helped grow the community for years now, who have so far been left out. That's a wrap on the NFT market. I'll see you again next week with another market update.
Always interesting in the world of NFTs. You appreciate that very much. Thank you for joining. All right, on that note, let's take a quick break right now. We're going to focus on how crypto is faring in the world's most populous country. We are talking about India. Don't go anywhere.
Forecast News is your gateway to all things blockchain. Breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built and Forecast has it covered. This is Forecast News.
All right, welcome back to Forecast IQ. We're going to talk about crypto in India right now. It's been a rough spot for the better part of the past year. We've got regulatory changes, taxation, and market movements, and it's all impacted the crypto landscape in the South Asian country. Forecast's Pradeep Mukherjee takes a closer look at where the industry stands today.
It's 100% speculative activity, and I would still hold the view that it should be prohibited.
The message from India's central bank is clear. Crypto is not welcome in the country. India's crypto story can be traced back to 2014, when the nation's first crypto exchange, Unocoin, was set up. As digital assets rose in popularity, Indian entrepreneurs spotted a new opportunity. And over the next few years, local cryptocurrency exchanges, CoinSwitch, CoinDCX, and WazirX were set up. Matic Network, which later went on to become the Polygon blockchain, was created in Mumbai in 2017.
The building scene is still quite vibrant in India. Of course, there are certain, startups which have left, in the sense that they have now set up in some other jurisdictions, but still majority of them still work and stay in India.
In 2021, India introduced the cryptocurrency bill. 2 years on, the bill has yet to become law. Anand Purushottam of Crypto Legal told Forecast, it is likely that we will see a new version of the bill this year, and the outcome will depend on India's discussion with the G20.
And a lot depends on the kind of deliberations that G20 member states are actually going through. So once we have some clarity on what members under G20 think about it, they are also likely to release a report soon, probably in 2-3 months. And that report of G20 is likely to, in my opinion, shape the kind of crypto bill that we'll see in India.
While digital assets were not officially banned, regulators were clamping down through enforcement. In the 2022 budget, India introduced a 30% flat tax on all crypto income and a 1% tax deducted at source, or TDS. This had an immediate impact. Crypto exchanges saw trading volumes drop as much as 90% from July last year, and over $3.5 billion of crypto trading moved to offshore crypto exchanges, according to one estimate. Earlier this year, India also expanded the scope of Prevention of Money Laundering Act, or PMLA, to include digital assets, which requires crypto exchanges to conduct due diligence and report suspicious transactions. India's Financial Crime Fighting Agency, the Enforcement Directorate, has been investigating at least 10 crypto exchanges for alleged money laundering and has seized over $115 million so far.
This taxation is kind of a regulatory tool that the government wanted to use to maintain a status quo. And this status quo becomes very important because, say if we look at the timelines, then tax was imposed last year in March, and that was the time when, though even now we don't have cryptocurrency specific law.
While India has been bearing down heavy on crypto, it sees value in the underlying blockchain technology. Speaking to Forecast, Raj Kapoor, founder of India Blockchain Alliance, said various industries are adopting the technology.
What we do promote is adoption of the technology, that's blockchain, and the distributed ledger technologies, and everything which flows with it, that is the metaverse, the NFTs, the DeFis, and the Web3s, all that is coming inside now.
The South Asian powerhouse has also been working on developing its own CBDC called the e-rupee, which the central bank sees as a game changer.
CBDC is the future money. Large number of countries are working on CBDCs. Technology is becoming more and more robust in this area. We cannot be left behind.
Countries' leading banks, including HDFC Bank, ICICI Bank, and Kotak Mahindra Bank, participated in a CBDC pilot launched late last year. The e-rupee trial tested both wholesale and retail payments. And just a few weeks ago, 6 Indian banks and JP Morgan launched a pilot to try real-time dollar settlements using JP Morgan's Onyx blockchain. India is also using its presidency of G20 to push for greater collective oversight on crypto assets and markets. Moreover, digital payments have taken the country by storm. Even street vendors proudly display QR codes for payments.
I don't think it's really a question of survival in the sense that, at least personally, I don't think the taxation regime that is applicable today will continue. And it's kind of a transitory provision where once the regulatory part is clear, then there will be a rationalization, and probably we'll see at least some form of tax benefits given to the ecosystem.
The future of the whole entire asset class is going to be tokenized. Today we have tokenized real estate, we have tokenized bonds, we have tokenized, we can tokenize green carbon credits, we can tokenize anything which is an asset. The next 5 to 10 years will see a major paradigm shift from the way things are today to getting tokenized.
Could crypto then be the next step in the country's fintech journey? Will we see clearer regulations and a well-defined crypto ecosystem develop in India? Or will crypto firms be pushed further into the shadows? Well, we will surely keep a watch. In Kolkata, India, I am Pradita Mukherjee.
Well, that's a wrap on this week's show. It's always great to be with you. Remember to like and subscribe to this video if you're watching us online. It helps us get to you and get all of those insights to you better. Or stay tuned right here on this channel if you're watching from home, the office, or really wherever you are. We really appreciate the time that you've spent with us. It's easy to stay connected with Forecast for the latest developments in the world of crypto and Web3. I'm Forecast Editor-in-Chief and your host, Angie Lau. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forecast IQ. Get intelligent in Web3.
Good morning, happy Friday, and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm your host, Jen Sanasi. My co-hosts, Lawrence Lewitton and Emily Parker, are off today. And so myself and the amazing technical team behind me are the only suckers working this long weekend, but we have a great show for you. Let's take a look at what's going on in the markets this morning, starting with Bitcoin. The Bitcoin price XBX index is at 31,000. $1,003. Going up again after some Fidelity news when it comes to Bitcoin ETFs. We'll talk about that in just a little bit. Let's see what's happening in Ether. The CoinDesk Ether price ETX index is at 1,907, up over 2%, following the same trend as Bitcoin this morning. Let's see if DeFi assets are following suit. The DFX CoinDesk's DeFi index is at 112, up almost 7% this morning. All right, let's talk about that Fidelity news that is moving markets this morning. Fidelity has refiled paperwork for its Wise Origin Bitcoin Trust, joining the wave of spot Bitcoin ETF applications after BlackRock, Invesco, and WisdomTree. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's State of Crypto newsletter. Good morning, Nick.
Good morning and happy Friday.
Happy Friday. All right. We're gearing up for the long weekend and we have another Bitcoin ETF filing. This is Fidelity's first application since it was rejected in January 2022, right after the SEC said no to Bitcoin ETF applications from First Trust and Skybridge Capital. What happened then? What are they doing now? Why is now the time for this flurry of applications?
To answer your last question first, honestly, I think now's the time because BlackRock did it. And I think everyone's got this assumption that BlackRock has a pretty good record, right? It's had exactly one ETF rejected out of nearly 600, I believe. So, it seems to be the idea is, well, if BlackRock's doing it, clearly they think that there's some compelling reason. But what's really interesting to me is we haven't seen much change in terms of the actual underlying Bitcoin spot market that might warrant change, right? So if you look at all the SEC rejections from years past, and there have been some pretty lengthy, explanations of why that's regulated by the SEC at this point, or even the CFTC, that screams, okay, well, this is definitely what the regulator is looking for a Bitcoin ETF application.
Could there be something in this surveillance sharing? So recently we saw Cathie Wood's ARK Invest amend their spot Bitcoin ETF to include the service sharing agreement. This is similar to the language used in the BlackRock filing. Is there something there maybe?
Yeah, that definitely addresses one of the SEC's big complaints that they haven't had these surveillance sharing agreements in the past, or if they have, that the markets that they've set them up with weren't, significant or, regulated enough to satisfy the SEC's concerns. So that definitely seems to be what these companies are saying they've solved. BlackRock, Fidelity, even, as you mentioned, Cathie Woods' company. They all seem to think, okay, well, we figured out how to set up this kind of surveillance sharing agreement with a market that should meet the SEC's needs or demands. But again, I'm really curious to see what markets they choose, because at least as of today, June 30th, 2023, we haven't seen any of these markets really come into place. Now, the one thing that might be the case is these companies might be thinking, okay, well, the SEC started to bring lawsuits against crypto exchanges. Perhaps there will be a more regulated spot market by the time they get to the end of the review period. Which could be as long as 240 days from whenever the SEC first acknowledges them. So that might be what they're anticipating. And this is just kind of a first swing at something they expect to see in place in the next couple of months.
I think it's important you bring up that more than 200 days number. This isn't something that's going to happen tomorrow. There's a process here. And as we saw on that graphic that was flashing on the screen just a moment ago, there have been 30 tries so far, according to some data. Talk to me about the next steps in the application process. What can we expect?
So the thing we're looking for right now is the SEC's formal acknowledgement that it is reviewing these applications. That's going to kick off the first 45-day review period, at which point the SEC will have the option of extending or approving or disapproving the application. My guess is, and this is what the SEC has done with every single one of those applications before, is they will extend the review period to go through the full 240 days. But right now, all we've seen are the initial forms filed by the issuers, so by BlackRock and Fidelity. What we need to see is the SEC post on their website and on the Federal Register a document saying, okay, well, we have received this thing, we have begun looking at it. That could happen, soon. It could take a few weeks, but generally follows pretty quickly from once the first form, the 19B4, is filed.
Any indication from your reporting, from a regulatory perspective, why there's so much excitement around this when these ETFs exist in places outside of the US? Like, is there just hype around this, or from a regulatory perspective, is there something here that we should be watching more closely?
Well, companies have been applying for Bitcoin ETFs for years now, and the argument has always been that if you have an ETF structure, it lets people gain access and exposure to Bitcoin without having to actually buy into Bitcoin. So if there's concerns about, for example, things like security, or for people who don't want to deal with their own wallets, or for, companies or, accredited investors or, sophisticated investors who want some kind of security and assurance about what they're investing in, but don't want to, or can't deal with the actual Bitcoin market. In theory, this will provide them with access. Also, Bitcoin ETF should be, accessible by anyone, really, any kind of retail trader. So, open your TD Ameritrade account if you want to. So, basically, the security is one thing, and then the ease of access and accessibility is the other thing. A lot of people just really want to see whether or not there will be mainstream interest in Bitcoin through an ETF structure, where there might not be if they're stuck trying to buy Bitcoin on their own wallet and self-custody or trusted custodian or anything like that.
All right, Nick, we are going to leave it there. Thank you so much for joining us this morning, and I hope you have a great weekend.
And you.
That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Joining us now to discuss the crypto market's reaction over the spot Bitcoin ETF race is the CEO of institutional DeFi asset management company Hashnote, Leo Mizuhara. Welcome, Leo.
Hi, Jennifer. Nice to meet you.
Nice to meet you too, and thanks for joining the show this morning. Now, I have to get your take on the Fidelity refiling. We just unpacked it a little bit with Nick, but what's your take on the ETF and the market's reaction?
Yeah, I think the refiling is super interesting. As you guys know, this is the second time Fidelity has filed, and being on the back of BlackRock, WisdomTree, ARK Invest, VanEck, I think this is really showing this demand for this product, and the market reaction is similar. It's showing that a ETF in this space would definitely support Bitcoin price. I think one thing that might be worth noting here is, to some extent, all of these institutional providers all applying for this ETF at the same time almost acts as a challenge to the SEC's decision-making process here. Clearly, these are real investors. These are BlackRocks and the Fidelities of the world think this is a reasonable thing to have on the market. And clearly, many other regulators have also thought the same thing. There are Bitcoin ETFs in Canada, Europe, Brazil, Jersey. There's a lot of precedent for thinking that these are reasonable securities. And so I think this is it's interesting to see this wave of investor demand for this product that the SEC will have to come up with reasonable reasons to accept or deny.
I'd love to get your opinion on if you think that this is going to be accepted, given the big names that have filed. Given what Nick Day just told us, not a lot has changed in the U.S. since the last filings were rejected by the SEC.
That's right. It's really hard to tell, actually. I have no information on this particular likelihood of these being accepted. However, as the market matures, I think the likelihood of one of these passing only increases. It almost starts to look unreasonable as players even as big as BlackRock are starting to file the same claims.
We've seen Bitcoin hold above 30K and hit 31K in the last 24 hours, as we saw at the top of the show. Do you think the market is going to sustain this as we get more clarity over these ETFs?
I actually do. I think that this upcoming, I think we're out of the lowest of the bear market. And I think this next wave, this next cycle is going to be really driven by institutional investors. At least that's my thesis. And this wave of ETF filings very much supports that thesis. And I think we'll continue to see more and more institutional adoption of Bitcoin first, but then eventually other cryptocurrencies, and eventually also more of the DeFi ecosystem.
Today, Bitcoin options contracts worth roughly $4.5 billion expired on the Deribit exchange, which controls over 85% of the global options activity. It's also the end of June. We're halfway through the year. What are your expectations for July?
Well, I think July is going to be a relatively quiet month, although no months are ever quiet within crypto. But I expect a steady grind. I think we've seen a very consistent upward trend since March, and I'm looking to continue to see positive headlines and positive movement out of this ecosystem. There's a big conference happening in Paris mid-July, and generally speaking, conferences where people have shown new technologies and new products within the ecosystem have been very positive for the market.
And does your positive outlook pertain to Bitcoin and DeFi assets? I know you haven't been on the show every day this week, but Bitcoin has held steady. DeFi, our DeFi index has kind of been up and down. Both are positive this morning. Talk to me about those two elements of the markets. Do you see them moving in the same direction?
Yeah, Bitcoin has been outperforming because of the level of institutional involvement and this positive hype around the ETF. I think that's very well deserved. Bitcoin is definitely going to be the biggest asset for a while in terms of institutional adoption and just general market knowledge, I think. I do think that it will also continue to prop up DeFi and the reasons for the public to use the DeFi ecosystem as well. In particular, I've been watching a lot of the altcoins have been hit over the last month or so, particularly after the SEC filings, but almost all of them have recovered at this point. And I think that's a very positive sign, despite there being not that much news around them. And so we're seeing people really support that ecosystem and understand that not all of them, even if they are deemed securities, not all of them are going to be not unviable at that point.
All right, let's talk about this PCE data that came out just before the show started. The Federal Reserve's preferred inflation gauge came out. The PCE index increased 0.1% in May. What's your reaction to how inflation is impacting the wider crypto market?
Yeah, inflation and kind of the broader macro ecosystem in general is very impactful, particularly for Bitcoin. I think we started to see it we started to see it diverge a little bit from the general macro, given the positive news. However, it is going to be a risk-on asset for a while now. So I think seeing tame inflation is always going to be positive. We've seen inflation come down pretty strongly over the last year, back down to really within range of what the Fed's going to be comfortable with. So the Fed being on pause and inflation no longer really looking like a threat is going to be only positive for crypto in general.
Now, I've asked almost all of our markets guests this week, but economists are calling for a recession either by the end of this year or by Q1 next year. How do you think this is going to impact the crypto markets, if you think it will at all?
Well, a recession is never good for any risk asset, right? But easier money, if the Fed starts to cut, will certainly be good for both crypto and the tech ecosystem. I also am not certain, though, on some of these calls for a recession. Many of them are predicated on this gut reaction of higher rates means recession coming soon. And I don't think that's the right conditionality, although there is definitely some correlation there. We are seeing a very strong market, a very strong economy, despite the fact that rates are high. The fact that we see this low inflation and low unemployment regime, even now with rates at 5% plus, I think it's hard to say that we're going to get a recession that quickly with such a strong economy going on.
All right. And lastly, back in February, Hashnote was the first company to be launched by Web3 incubator Cumberland Labs. Hashnote is also regulated in the US by the CFTC. Where do you see the future institutional grade decentralized finance headed?
Well, I think generally, historically, finance has been very good at ingesting new technologies. And DeFi and this whole crypto blockchain thing is going to be no different. We're seeing adoption from many of the major financial firms in a variety of ways. We've recently seen a resurgence of money market funds on chain, particularly from Franklin Templeton and the like. We see experimentations from guys like Goldman Sachs and JP Morgan all the time. And so I think it's only a matter of time before we ingest all this technology and make a new financial system that's really driven by blockchain technology. And that's what we're doing at Hashnote. We think that because the future of finance is going to be driven by blockchain, having an investment manager that is blockchain first really is going to be an advantage as more and more of these assets go on chain. I think it's as inevitable as the electronification of equities markets, for example, which may have looked crazy to people in the 80s, but now we can't imagine a financial market that's not fully electronified and traded on the internet.
Anything that you think needs to change with regulation to achieve this future you just described?
Oh, almost certainly, right? That's the one thing that everyone is terrified about, particularly in the U.S. It's really a shame to see so much of the talent going abroad, as many of the other jurisdictions are actually quite positive on blockchain technology and crypto. We're seeing a lot of positive developments in Europe, post-MiCA. Hong Kong is trying hard to attract talent at this point with their new regulation. And the Middle East is very positive and very proactive in trying to attract crypto talent as well as crypto money. So I am quite optimistic still about the U.S. being able to change course. I think we have a history of making great last-minute decisions, and so we're awaiting that as we set up shop and are expecting the U.S. to eventually make the right decisions, and perhaps do so in a very cautious manner. But with the type of money at stake, I think caution is a perfectly reasonable way to enter this market.
All right, Leo, we're going to have to leave it there. Thanks so much for joining the show this morning, and have a great weekend.
Thank you very much, Jennifer. You have a good weekend too.
That was Hashnote CEO Leo Mizuhara. We're going to take a short break, and when we come back, new details are out surrounding FTX's latest bankruptcy deadline. We'll discuss with an expert in the distressed crypto asset market next.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Could FTX come back to life? The infamous crypto exchange is talking to investors about a relaunch. This is according to a report from the Wall Street Journal. Joining me now to discuss is 507 Capital Managing Partner Thomas Brazil. Welcome to the show, Thomas.
Hey, thanks for having me.
Thanks for being here. Now, according to this Wall Street Journal report, current FTX CEO John Ray said the company, quote, has begun the process of soliciting interested parties to the reboot of the FTX.com exchange. Talk to me about what you think about this as an FTX creditor yourself.
Yeah, I think it's good to see them following all possibilities for recoveries, whether that's through litigation and, the regular sort of what are called preferences and fraudulent transfers and as well as marshaling assets. But then, going concern value is always more than liquidation value. So it's good to see them at least entertain the idea, even though I do still think that it would be a bit of a tall order for them to do. It's good to see this exercise happening.
Okay, you say it will be a little bit of a tall order. What do you think is the likelihood that something like this comes to fruition?
Well, it's looking increasingly more likely. So the probability has gone up over the course of the bankruptcy. But I would say it's still probably below 50% probability. If you really made me put a number, I'd probably say maybe a 20 to 30% chance. I think what the debtor is going to do is they're taking proposals from parties in the market who could actually run this business, and if that means equity in the new company for creditors, that's fantastic. We would be supportive of anything that we think maximizes creditor recoveries. But if someone's just going to show up and run the estate and get free optionality on the back of creditors, we would not be in favor of that. So the details are very important.
I know I'm asking you to speculate a little bit here. Any inclination, any ideas who these investors might be, who these interested parties might be?
Yeah, I mean, it would be a who's who of, crypto firms. I mean, I had heard the Figment floated around. I heard the Wave Financial guys' name floated around from a few parties in the background. These are all guys that were looking to do things with, probably with Voyager and definitely with Celsius. So it's the same parties that are, you see it in every cycle, when you have downturns, or every industry, when you have downturns and you're in a strong position, you look to consolidate and you look for business opportunities. And so it's not, it's anybody with cash and with the team to be able to potentially do this.
Yeah, I mean, everything we're talking about makes sense here. Do you think that the brand is able to revive itself?
Crypto has, I guess, crypto investors maybe have short memories. No, I think that it's confidently run with some capital put in by whoever the sort of plan sponsor is, in the same way that Celsius was run. Their sort of plan is contemplated to be done. Then we would be supportive, and I think that would be great for the estate. But yeah, again, it's still a lower probability. It's just good for the estate to see it out. I hope I answered your question there, but I rephrase if I didn't.
No, that was perfect. We introduced you as an expert here. You started buying Mt. Gox bankruptcy claims back in 2015, and 507 Capital is a major buyer of claims like FTX, like we've spoken about, 3AC and Celsius. Talk to me about the marketplace for buying and selling claims like this.
Sure. So I just a tiny bit of context. I started getting involved in Mt. Gox, and we started buying claims and have been a major buyer of claims across almost every crypto insolvency, and not just claims, but we've looked at doing what are called debtor in possession loans and any sort of litigation finance or anything that might be interesting. So at the end of the day, we're in this ecosystem, and we're believers long term in the ecosystem, and that's why we've put a stake in the ground that we want to be a part of these restructurings. Because long term, the ecosystem has to grow for us to benefit. So yeah, the market in general, there's a pretty active market for FTX. I would say Celsius, there's a pretty active market. Voyager, not as much, and Three Arrows, not as much. And then there are a number of tertiary dockets that people don't probably talk about that really aren't so active. But it's good. The American process for bankruptcy is great because
in FTX, there is a lot of disclosure. And so that allows buyers to be able to really get under the hood and understand the process of what the recoveries might be long term, and therefore offer decent compensation to people. And it also helps the seller get comfortable that they're not being hoodwinked into selling. Like they feel like they know what's going on in the case. So,
I have to ask you, given your experience, about a new product that hit the market recently by 3AC founders Kyle Davies and Suzu. They launched OPNX. They're tokenizing bankruptcy claims. Do you think there's a future for a product like this?
I do. Not sure if it's the right team to be doing it, but I definitely think that the idea of tokenizing bankruptcy claims is super cool. Much less incremental than the idea of maybe marketplace. Not that there's anything wrong with a marketplace. Marketplace is fine too. But I think innovation in the restructuring space is great. And it's nice. It's unfortunate for creditors that are caught up in it. But let the competition begin for creditor assets and eyeballs to be able to monetize their claim in any way they can.
Some might say that these two co-founders understand bankruptcy better maybe than the rest of us.
Yeah, I don't know. No comment. I don't know what to say to that. I wish them the best. I think it's great for creditors to have just more options. It can't hurt.
All right. I want to talk about something you tweeted yesterday. You tweeted a line item from John J. Ray's expense report. It shows the current FTX CEO is researching treasury investments and cash options. Explain what that means and why it matters.
Well, I guess if rates are at 5%, 5% on $4 billion or whatever, $3 billion, whatever the cash holdings are at this point, would be fantastic for the estate because it could help with the administrative burn. But in U.S. bankruptcy, and I'll say I'm not a lawyer. We invest in these, so I think I'm saying it right. When you're supposed to be in FDIC insured accounts, so for him to basically go do treasury management, he'd have to motion for the court to get approval for whatever they're doing. But there is huge cash balances, and they are just sitting around. They should be invested in a conservative, but it wouldn't be wrong in a prudent but conservative way. I don't see why they wouldn't be looking at this. So it's nice to see. I think people have talked about it for a while on Twitter and other places. And look, I had the opportunity to meet John in person a few weeks back, and he was fantastically great and candid. And I think this is just more of John being John, which is trying his best to increase recoveries for creditors.
Thomas, thank you very much for joining the show today, and I hope you have a great weekend.
You too. Thanks for having me. Y'all have a good weekend.
That was 507 Capital Managing Partner Thomas Brazil. We're going to take a short break, and when we come back, we'll reveal the top places in the world to live and work in crypto, blockchain, and Web3. Find out what those are when we come back. Good morning and welcome back to First Mover on CoinDesk TV. Zug, Singapore, and London ranked the highest in CoinDesk's crypto hubs list this year, which details the best places in the world to live and work in crypto. Joining us now to discuss how these rankings came to be is the CEO and co-founder of IOMob, Boyd Cohen. Welcome to the show, Boyd.
Thank you, Jen. Nice to be here.
Wonderful to have you on this Friday morning. Now, you consulted with CoinDesk to create these rankings. Talk to us about the methodology. What went into scoring and rating these cities?
It's always a tricky prospect, and it's always going to be contentious, the results. And this was the first time we ever collaborated to build this. So it's going to be a learning process for all of us as we move on to future rankings. I actually, in the past, used to do smart cities rankings for Fast Company, and that's kind of how the conversation got started about collaborating. Worked with the team at CoinDesk over, 6 months or so, and we applied. So I have a background in academics, although I've been working in crypto now for 6 years, and have actually visited or been to events at almost all of the top 15 in our list. So I have some context. We went through kind of a blended process that's somewhat academic and then very practical. In the end, you have to be a bit practical when you do a ranking like this, because there's so many different ways of capturing the data and using the data to actually try to come up with a credible ranking that people would actually, accept on its face as being a neutral, credible result. And in our case, what we did was stage one. We reached out to experts we knew globally, and we specifically sought out people in less obvious places too, so that we had a more holistic approach to this. And the first question was, name the top 20 cities in your opinion, or regions or hubs, because we define it as hubs. So the idea was, you never know. There are areas in the world where it's not just a city, but maybe a region or like a couple cities combined that are creating like the Silicon Valley for crypto, right? So we use that kind of process to get from subject matter experts a list of cities to start with. And then we looked for, out of the 20 or so experts that we got good responses from, we looked at where there was overlap, as in this region or hub has been named by at least two of the experts we reached out to, and that formed the basis of the starting point for the ranking, followed by a collective exercise to choose the indicators that we should select, and then find data that was accessible and acceptable to represent those indicators we wanted to capture.
Okay, so definitely a thought out process in putting this list together. You said you visited all of the countries that
most of them.
Most of them. Any cities that you were surprised to see make the list?
Well, for sure. I mean, I think I barely knew anything about Ljubljana until we did this ranking, so that was one that surprised me. We had some that were maybe not surprising, but didn't make the final cut, that I was happy to see in the first list, but didn't make the final 15, like Lagos in Nigeria, Buenos Aires, El Salvador. Again, going to that point that I think, increasingly, and it's even interesting, some of your prior interviews today regarding sort of the regulatory environment, the approvals of ETFs in the US is kind of interesting to juxtapose. You've got the US market, which did, some people view the rankings as, well, the U.S. did pretty well, because like 6 cities in the U.S. made the top 15. But when you look at most rankings of cities for innovation, usually the U.S. is dominant, right? And in here, I think the first city ended up, the U.S. city was 8th. So every other cities from around the world before U.S. cities appeared. And that is because of the regulatory environment. Whereas you find in some of these more developing countries and cities like Lagos and others, you have a much more favorable environment. El Salvador, where they actually, of course, used Bitcoin as legal tender.
Talk to me a little bit more about how regulation played into the scoring here. We just saw a graphic that had the weights for the scorecard. How important was regulation when putting this list together?
Yeah, this was something we debated internally. I mean, obviously, any ranking, selecting indicators is already a challenge. And then deciding the weighting of those indicators is another challenge. And we had a lot of debates about it, but in the end, for us, it was just so critical, the regulatory regime, because without it, you really just don't have a solid foundation for a vibrant crypto ecosystem, whether you're a startup, whether you're a venture fund, whether you're a digital nomad. If you have a antagonistic relationship with the regulation bodies around crypto, it's really hard to have a flourishing crypto ecosystem. So, you could argue that it is surprising that there were even 6 cities from the US that made the list, or North America that made the list, given the frankly terrible regulatory environment you find in the US, compared with, and one of your previous guests just talked about it, Abu Dhabi, Dubai, Hong Kong, Singapore. So many cities and regions are really taking a leadership, London, taking a leadership position on not saying we're going to regulate by enforcement, but we're actually going to embrace these kinds of initiatives, this kind of innovation around crypto. And we want to attract the world innovators around crypto. And, there's that recent story with Andreessen launching an office in the big venture fund in London. And one of their biggest rationale was specifically the regulatory uncertainty in the US versus the certainty around it in the UK.
Wrap this up for us as we go into the weekend. What does this list of cities tell you about the state of crypto on an international stage?
What I actually kind of love about it compared to most traditional sort of innovation indices is how decentralized and democratized hubs of innovation around crypto are. I think if you looked at most tech industries, you would see more bias exclusively in the Western world, particularly Europe and North America. And what I love about crypto is, by default, by its design, it is a democratizing technology. And therefore, we're having these hubs emerge all the way down to Lagos, to El Salvador, and of course to Dubai and other markets. That's what kind of has me the most excited about the future, is that we're not like putting all our eggs in the basket of Silicon Valley, but instead seeing flourishing ecosystems all around the globe.
Boyd, thank you very much for joining the show this morning.
Thank you, Jen. My pleasure.
That was the CEO and co-founder of IOMob, Boyd Cohen. Head to CoinDesk.com to check out the rest of the cities that made our crypto hubs list this year. That's it for First Mover. I'm Jen Sanasi. Thank you so much for coming and joining us this morning. It will be off for the weekend, but back on Monday. I know it's a long weekend for most, but we'll be back right here on July 3rd. In the meantime, you can catch The Hash today at noon. You're watching CoinDesk TV.
Hey there, welcome to The Hash. It's me, Zach. I got Jen Sanasi. I got Adam Levine. We're on CoinDesk TV. That's pretty cool. CoinDesk Podcast Network, also super cool. Check it out. Good stuff. We're here to talk about today's news in crypto and more, and I'm going to kick it straight to Jen for the first story of the day. Jen, what do you got?
All right, we got some more developments with FTX. According to a report by the Wall Street Journal, FTX is moving ahead with plans to restart its international exchange. CEO John J. Ray III is quoted in the article saying that the company has, quote, begun the process of soliciting interested parties to reboot of the FTX.com exchange. Sources say the company has already had early talks with investors about different structures, including possibly a joint venture. Adam, I'm going to kick this one off to you. Seems like FTX 2.0 could be on the horizon. What do you make of this?
Well, I think it makes sense just from the perspective of if you were going to try to get value out of this brand, then this would be the way to do it. FTX, although it had a pretty abrupt fall from grace, really was a top exchange for a good amount of time, not necessarily for folks in the US. We weren't really allowed to use it, much to my chagrin at the time. But in hindsight, that turned out to be pretty all right. The reality, though, is that if they can reboot it, then there probably is substantial brand value to be had there. And that could wind up being a better way to recover, much of kind of the losses that appear to have been incurred here for folks who have funds trapped in there. It could also work out well for the company as well, because it likely would mean that not just kind of beyond the restarting, that there would be some type of equity allocation that would actually go to people who are owed money by the exchange. And so that could then allow the company to keep kind of more liquid capital and go from being something that just gets liquidated, down to nothing, to pay off what it can, to instead continuing as a going concern, which would be better for some of the parties who are involved here. So I think that it makes sense. I think ultimately it'll be hard to pull off. There's a lot of challenges around trying to reboot this type of brand in this type of situation, but it makes sense they would try. Zach?
Yeah, a lot of people who used FTX really liked the interface, right? They liked the UX, they liked the functionality. People were fans of it. Whatever was going on behind the scenes wasn't evident to them. The massive dumpster fire that apparently was FTX and Alameda wasn't apparent to a lot of users who really sang the praises of the trading interface at FTX. So the idea that they would kind of roll out that technology certainly makes sense. I think it shows some forward thinking by John J. Ray III. JJ Ray out here launching things despite maybe some initial skepticism that this would ever come to pass. I know we expressed a lot of that skepticism on this show previously. So if this ends up being the case, I mean, yeah, hats off to him for trying to get money back into the system and pay out people who are harmed by what appears to be, or what is alleged to be, a pretty massive fraud. So yeah, it's gonna be interesting to see. I think the thing that I'm most interested in is which backers back FTX 2.0, which venture funds sign up, sign their name on the line, put their name next to the FTX brand and say, you know what, we're doing it. We're going all in. There was some fans of this product in the past, and we think we can breathe some life into it in a way that makes sense. That to me is actually going to be the interesting thing. No names were mentioned in the piece, but reportedly at least JJ Ray is making the rounds and saying who wants to back this thing. I'm very curious to see who that ends up being. Jen?
Yeah, the piece said that parties that want to be involved must submit indication interest by the end of this week. So if you're watching and you want to be a part of this, you have until Friday. And the piece also said that Figure is allegedly interested in helping FTX restart. You'll remember that they bid on the rights to Celsius, but lost to the consortium that won that bid. So interesting. I am also very curious to see who could get behind this, but it sounds like probably, Adam, to your point, one of the better ways to get funds back into the hands of customers, to give customers some kind of something that can make up for what's happened over the past year with FTX. I see Will Foxley has joined us. Will, what are your thoughts on the possibility of FTX 2.0? And welcome to the show.
Thank you. Thank you so much. I don't know what you guys just said, so I might just be repeating it, but that's okay. I'm going to still say it with enthusiasm. I think they should relaunch FTX 2.0. I hope they do go along with this. Why? Because there's a lot of creditors involved with this, and maybe everyone who's involved here can get some money back. We've seen all the other stories of failed exchanges, right? People get like 10 cents back on the dollar, 14 cents back on the dollar. Well, what if there's a world where FTX is able to reboot itself and pay back everyone the full amount of their money in USD terms? That's a pretty fantastic ending, though a very unlikely one. I know there's a lot of people on crypto Twitter who are pushing for FTX 2.0. They're like putting it in their bios. They're putting in like their handles saying like, we want this to occur. It's typically people who obviously lost a lot of money and are well down like the creditor stack and are unlikely to get money because all the money goes to people who had loans out to FTX or our lawyers working on the Chapter 11 case. So that's what I'm cheering for. I think there's a place for another exchange out there. It's sort of like the Ledger news yesterday with the institutional trading firm that they're trying to boot up. There's a vacuum right now. After FTX left, a lot of liquidity left the market. A lot of people didn't know where to trade. Coinbase is under siege. Binance is under siege. I think it's prime time for another person to step up and build an exchange that a lot of people can use. Did I repeat anyone's talking points? How was that?
That was highly value
supported
additive.
Our
Coming
points.
in blind. That was nice.
That was really good. It's professional. I will say that. I wonder how regulators are going to use the narrative. I know there will be probably no validity to saying something like, FTX failed customers. There was like massive wrongdoing behind the scenes, and here we are. FTX is back again. I can see regulators saying that. I can see them using this narrative to push regulation that maybe is not favorable to the industry. Not saying it has any validity to it, but I can see that happening. Separately, customers have until the end of September to submit bankruptcy claims. So I just wanted to get that in there. If you were a customer of FTX, you should be receiving a link to submit your bankruptcy claim, and you have until the end of September to do that. That is my public service announcement to the people.
Very nice.
Thank you, Jen. Okay, cool. Let's move on to our next story. So next up, publicly listed exchange Coinbase continues to battle allegations from the U.S. securities regulator, which has accused the company of exposing users to what the SEC alleges are unregistered securities. A security, whether registered or not, is essentially a contract with obligations laid out and defined in at least basic terms. And that is the crux of Coinbase's argument for why the SEC is in the wrong here. Quote, because no such obligations are carried in the transactions over Coinbase's secondary market exchange, and because the value that Coinbase purchasers receive through these transactions adheres to the thing bought and traded rather than in the business that generated them, the transactions are not securities transactions, end quote. This is a somewhat controversial take, just because, again, in the world of cryptocurrency, there's a lot of questions about what really is a security as it relates to the Howey test. Zach, I'm going to throw this one to you first. Kind of what's your read on this argument? Is this a strong argument for them?
I think it's a very interesting legal tack. I think what you laid out, right, is that tokens don't guarantee an ownership stake in the projects that ostensibly launch them, right? They exist, they do their thing. There's no public disclosure requirements in terms of how these alleged securities would disclose that information to investors. So Coinbase is saying, hey, this isn't what you think it is. It does not exist within the existing purview, and you've failed to establish clear rulemaking and instead have chosen enforcement. So that I think that's honestly the crux of the argument, and is an interesting argument. It's going to be an interesting one to advance through the courts and to see if judges are sympathetic to this argument and whether or not the U.S. securities regulators have done their due diligence in trying to establish a framework for what these other things will be regulated as. Gary Gensler obviously has maintained that just because it's a new technology doesn't mean it's not going to be covered by existing securities laws. And Coinbase here is saying, no, that entire premise is wrong and faulty. And how that's all going to get arbitrated in court is going to be really fascinating. But yeah, interesting to see this as the initial volley. Wouldn't have necessarily expected that this would have been the approach, but certainly it's a strong statement. That's what I'll say. Will, I'll toss it to you.
Yeah, I actually kind of disagree with Coinbase here. I think that some tokens that they list are not securities, but some of them do fall under the parameters of what a security would be, even if they use different language and wording. Let's take, for example, a governance token. There's a lot of governance tokens listed on Coinbase. You're able to purchase them there. These governance tokens basically have one purpose. That is to govern the function of a DAO that controls the network. And these DAOs purpose is to streamline the network, adopt more users, and generally increase the price of the token. It's like a classic flywheel for these things. And that's been well known for a lot of these projects. You need that. And I actually don't disagree that that's not a good use case for these tokens. I think a governance token can have a good place. But if it quacks like a duck, I think you've sort of get the picture, right? Like there could be some problems here. Now, not all the tokens that are listed on Coinbase are that. I think some of them are like that. So I sort of take a different stance. I just think like the Howey test in general is like an old, outdated law and can be changed based on the fact that, things have changed, technology has changed, and there's probably a better way of enforcing regulations than what they're doing currently. The other thing I wanted to bring up was the Coinbase part of this Coinbase article is talking about how they don't like the enforcement actions that have been taken to date. Quote, for years, Coinbase has voluntarily submitted to regulation by multiple overlapping regulatory bodies, has adhered to the public and limited formal guidance from the SEC, senior SEC staff, and the court about the application of securities laws to its industry. They're basically taking another stance within this argument saying, not only do we think the securities laws are wrong, but we've tried to listen to you guys and you guys have not helped. And therefore, this whole thing should be thrown out in the first place because you're going against your own guidance, which to me is like almost like a 1-2 punch, like coming at them, but also sort of helps them in the back case that, whoever is the judge here disagrees with Coinbase on the securities point, but maybe we'll agree with them on the fact that the SEC has not been following through with their enforcement actions in like a healthy way. Gonna throw it over to Jen.
Yeah, I think it's a good argument. And Will, to your point, I mean, there are all of these tokens that exist and there is the theoretical use case for it, but then there's how people are actually using that token. And we need to take all of that information into consideration. I think what this highlights is there's the Howey test. It's been used in one way by the SEC for a really long time, but when applied to this industry, maybe there are aspects of the Howey test that are left up for interpretation, which then means the Howey test maybe is not the best tool to use if it can be left up to interpretation. And I think Coinbase's response to this shows just how it can be left to interpretation. Like we're discussing it right now. We're taking different things away from how the Howey test is being applied to different tokens that Coinbase lists. And I think that's a good thing to highlight. Zach?
I guess the big question, like as it relates to Howey, is are tokens the contract to the orange farm or are tokens the oranges, right? Are tokens an investment contract, or are they just merely something that maybe was initially involved in what may have been an investment contract, and therefore it doesn't necessarily sort of comport with like these existing structures, right? And there's a lot of fuzziness and a lot of questions around that. We've seen a big debate spring up over the launch of Prometheum, which got a special purpose broker-dealer license to trade in digital asset securities, but hasn't really offered much detail into how that would actually work in terms of the investor protections and other things set forth by current regulations. So this conversation is really fascinating for Coinbase to zig in this direction with their sort of initial statement. It's just make for some really interesting viewing, I think, in terms of this brewing SEC crackdown legal/regulatory fight that's obviously being played out on multiple fronts right now. So yeah, another fascinating move to see. I'll also add.
Yeah, I mean, I think we can wrap up with, I'm comfortable making a prediction here, which is to say that we're going to see this mess continue probably for another 1 or 2 years. And then I think Congress will eventually act in a way that sort of puts this to bed. I agree with the point that like Howey is the tool we have, not the tool that we need. And kind of the all of the deficiencies with that standard in kind of the modern era, you know, close to 100 years later, I think about 90 years later at this point, like that's where the challenge comes into play here, is just that we're using a standard that was designed at a time before we understood a lot of stuff that's like on the basic science level, much less kind of the modern era of technology. And so this will eventually get solved. But in the meantime, it's kind of fertile ground for sort of these power games that these regulatory agencies play, where basically their own sort of self-aggrandizement and their importance to the current narrative. Like if the SEC wasn't focused on tokens right now and they weren't focused on cryptocurrencies, who would care about what they were doing? Who would think about what they were doing? Why would they get more money to do any stuff that they're doing? They wouldn't. So this is actually, again, like there's some meaningful incentive in here for them to make the argument that, hey, this is all about us and you better fund us more, right? Give us more power so that we can protect you from this, even if that's not really the fit. But the beat goes on.
And the beat goes on into the break. We're going to take a break and then we're going to talk about other stuff, including the MFers NFT collection at Lowe's. Can we even say that? MFers at Lowe's on a flag. That's kind of an interesting development in the world of NFTs. We'll talk about that with someone involved in the project and more on the flip side of this short break. Stick with us. It's The Hash.
And welcome back to The Hash. Are you a fan of lawn art and NFTs? Well, this segment is exactly for you. We're talking about MFers, which is a new project that integrated with Lowe's in order to put the MFers PFP on lawn art. Pretty interesting development here. We have Matt Varnell of Total Marketing Web3 joining us now to talk about it all. Matt, first of all, welcome to the show. And second of all, how did you get Lowe's to go along with this? Interesting development for the NFT space.
Yeah, thank you guys for having me. Very excited to talk about the project. My IRL job is product development, marketing, sourcing. I've been calling on Lowe's and other big box retailers for about 18 years now. So, it was a match made in heaven. Been a Bitcoin guy going back to slightly late, but about 2020. That transitioned into NFTs, discovered the MFers. What really intrigued me about the project was the CC0 aspect of it, to where it's essentially public domain. Satoshi, when he put out the project, did so in the manner where MFers can do what they want with it. So you can take it, you can put it on product. It's open to anyone to use that for whatever means they see necessary.
Okay, I have to ask you, does Lowe's know what MFers is? Like, how did this conversation happen? Like, how did you get the flag to be sold on the Lowe's website?
So if you go into a Lowe's store today and you shop garden flags, I'm actually responsible for their everyday seasonal business, right? So there's a line of communication already established there. This transitions from season to season. You have your holiday winter, you go into spring, summer, so it just fall and then kind of circles back around. So that line of communication was there. I'm constantly having meetings with the merchant team. This idea to sort of test the theory of, can Web3 help push, whether it's the marketing, the sales, the engagement, in the right direction. It basically took them trusting me, believe it or not, to make this thing work. The buyer himself didn't have a history in NFTs, crypto, so to speak. So basically, I said, trust me on this one. Let's see what happens. This is a test, and I got the green light. So yeah, it was a lot of selling on my side, to be quite honest with you.
Yeah, so that makes total sense to me as far as how this would happen. Thank you for the additional context on that. I'm super curious about the CC0 connection here, kind of in all of this stuff. Again, like CC0 is something that's getting trendy sort of in the world of NFTs. Sure. And basically it means that the owners retain no rights and anybody can really do whatever they want. That seems like that's kind of a double-edged sword though. And can you talk about how you're thinking about kind of the CC0 component and whether this is something that you would look to be doing more in the future, perhaps with other brands?
Yes, I would say absolutely. From our perspective, it's more about the entire community of MFers and NFTs really as a whole from the CC0 standpoint, right? So what we've discovered is it's almost like a built-in marketing team of devout supporters of not only the MFer project, but NFTs as a whole. And the sort of guerrilla marketing that's happened with Twitter specifically it was somewhat unexpected, to be honest with you, but we've kind of flipped the narrative to where now the consumer becomes the marketer. So, I mean, we're all over Twitter at this point with people finally this week receiving the product mail, putting it out there. And so it's from the CC0 aspect, there's no licensing fees. I mean, I've worked with Disney, I've worked with other, big brands in the past where there is a hefty licensing fee there. So really it was an experiment. Can we bridge Web 2 with Web 3 and see if this CC0 thing can actually fly?
Flag pun. That was nice. Good work. Yeah, so I think like Web3 is sort of famously small relative to like mass market numbers, right? If you look at like people who are interacting with Ethereum blockchain or the people who are transacting on OpenSea on a monthly basis, it's still in the tens of thousands relative to the millions, the volume that mass retailers are looking for. So I guess my question is, how is this interest leading to sales? How's it going so far? And what does like the total addressable market look like for this particular product?
So, yeah, you're exactly right. So I've sold Lowe's everything from vanities to closet systems, decorative hardware, functional hardware, seasonal product, and the numbers are astronomical. There's tens of thousands of containers that we're shipping in on an annual basis into the Lowe's supply chain. That being said, you're exactly right. I mean, there's only 5,000 active wallets that are actually trading NFTs at this point. What I thought would happen, and what actually did happen, is the idea that the engagement from Lowe's side. So they have their Twitter account, right? And it's not the most exciting account going, as most big box retailers, Home Depot, same story. They have gotten probably 100x plus engagement just within this Web3 community. So outside of selling the product, what we've discovered is it's really become a very, very strong marketing play for these guys. And they're seeing that the analytics from their engagement, it looks like a hockey stick. It's gone straight up. So that's where they see the benefit of partnering with us and doing something here. It's more about the engagement and just the pure marketing aspect of it.
Got it. We are going to leave it there. I have to ask, if we worked it out, could we get like a hash garden flag going? Could we get all of us on a flag in a Lowe's today?
Well, to be honest with you, this is not just a one-off situation. It's called seasonal MFers, and so this is edition one. Season 1, edition 1. We have a Halloween flag, which of course will feature the zombie MFer on it. We have a holiday flag in the works. We have a winter flag in the works. In between, because I'm also a memes maxi, we're gonna put out one of these 6529 freedom to transact, and that's going to happen, I'd say, in the next 6 to 8 weeks, somewhere in there. So this is going to be an ongoing project for us. So we're going to have new designs, new product. All of these are limited. So the initial CC0 summer flag, only 1,000. There is an NFT tied to it as well. The packaging we put together, I'm not sure you guys probably haven't seen it on Twitter, but it's a full unboxing experience. Nice color sleeve, embossed, rigid box, QR code. I mean, it's top notch.
Save the full pitch for when we're on it. So you're saying there's a chance that we could be on a flag. Is that what you're saying?
I just want my face.
No.
Everyone else.
It's got to be a team activity. We
can have a conversation.
I'll text you.
Man,
we'll be talking.
Yeah.
All right.
And by the way, shout out to my partner Stephen Thompson on this. S Thompson on Twitter. Unfortunately, he couldn't join us. We had to pick one of the two guys to come on, but he's going to be part of this thing too. So, and much love to my MFer community.
All right, fair enough. Well, thank you, Matt Varnell, for joining us and talking about this. Yeah, appreciate it. We'll talk to you later about our flag. All right, that's gonna be it for the show today. We're gonna wrap it there. That was a fun conversation. We will be back tomorrow talking about more crypto news. I am Zach Seward. We got Jen Sanasi. We got Adam Levine. We got Will Fox for now, but that stunt right there, I don't know. We might need to boom off the hash.
I'm getting me a long flag, boys.
There we go. There we go. Special edition Foxley print. It's going to be hot. All right. That's it for the show today. Thanks so much. Check us out on the podcast network. Check us out on Coindesk.com. A lot of great stories there, as always. We'll talk to you soon, I'm sure. Thanks for being here. Bye.
Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm your host, Jen Sanasi, here with my co-host with the most, Lawrence Lewitton, content director at The Tie. Let's take a look at what's going on in the markets before we get into the show. The CoinDesk Bitcoin price XBX index is at 30,617, up about 1.7, up exactly 1.7% in the last 24 hours, holding steady above 30K. Let's see what Ether's doing. The CoinDesk Ether price ETX index is at 1,865, up almost 1%. And let's see if DeFi assets are following suit. The DFX CoinDesk DeFi index is up, surprise, almost 1% at 105.37. All right, we are getting right into our first guest this morning. Damus has received the green light to stay on Apple's App Store. This comes after a 2-week battle that started when the tech giant threatened to remove the Bitcoin-friendly social media app for violating in-app purchase guidelines. Joining us now is Damus founder Will Kasserin. Will, thanks for joining us.
Hey guys, how's it going?
Hey.
Good. Thanks for taking the time to be with us this morning. Why don't you briefly talk us through this journey? There's been a bit of back and forth between Damus and Apple. Tell us where it started and how we ended up where we are today.
Yeah, so initially there was a battle to even get on the App Store. It required me to probably post it multiple times. It took like weeks. Eventually I got on the App Store, but as of 2 weeks ago, they basically told me that we're going to remove your app from the App Store if you don't remove this tipping functionality, which kind of sucked because it was a big part of the app. It's a big part of what makes Damus special. So I pushed a new version. They said it wasn't good enough, and so I was at the point where I just basically had to remove tipping altogether.
What exactly about the tipping aspect did they say was the problem?
Yeah, so their guideline is kind of confusing because it says if tip is ever used to unlock digital content, then it's not allowed. So in Damus, digital content is never unlocked. You only ever tip after the post is made. So I just found it very confusing, and I felt like they're kind of abusing that guideline. Then they had multiple calls with them, and they said their main issue was just the fact that button is on the post. They do not want Bitcoin tipping to be associated with digital content at all, whether it's unlocked or not.
Well, like a few days ago, we got an update that you updated the app and Apple was still going to delist it. And now we hear that you finally have approval. What happened in those last moments?
Yeah, so I thought I was trying to appease the guidelines by making it very clear that you're not actually tipping the content when you click the button. So I updated the button to tip the profile. But they said not even that's, they just don't want it. They basically want to make it hard for people to use this feature because they don't want content tipping to take off with Bitcoin. So even if I felt like I was following their guidelines, they said it still wasn't good. So I was just forced to remove it from the post altogether. You can still tip from the profile, like on Twitter. Twitter does this as well. But this calls into question a lot of other Bitcoin apps on the App Store, such as like Fountain or like these podcasting 2.0 value for value apps. Like technically those aren't even allowed given what they told me. So it kind of worries me that a lot of Bitcoin apps are going to be at risk now.
So a couple of things. Did you is this specifically because it tipped in Bitcoin? I mean, if you used, let's say, Apple Pay to tip, would they have been fine with that? And second of all, did you point out, did you say to them, look, you have these other apps that do the same thing. Why am I getting heat?
Yeah, I mean, I didn't do that because I didn't want to call them out and put them at risk. But I did think about. I know. I guess yeah. Now I did it. I just didn't want to do it during the review. It's thanks, true though. Yeah. So this idea of using in-app purchases. Well, in-app purchases, you can't use that for peer-to-peer tipping to anyone, like censorship resistant tipping to anyone in the world. So even if I wanted to use in-app purchases, I couldn't for this particular use case. That's what makes it interesting. So I really think that Apple should think different and embrace Bitcoin and maybe think about integrating Bitcoin. And just they should be embracing it, not fighting it. It's an open protocol, so why not? They could do it and bring Apple Pay to the entire planet.
And there's nobody there that you're like talking to. There's no like individual. Like, is there like a customer service rep that you have a kind of a business development person, somebody, a human being, not an AI?
Yeah, so the people I was talking to is just the App Store reviewers who like are very strict on these guidelines. It wasn't any like high level business person who's like looking to integrate Bitcoin. I think that's going to need to be another conversation.
You didn't talk to their manager, like, go full Karen.
No, I just trying to like stay on the App Store, and then maybe I'll pick my battle and do another fight later on. But I just want to keep it on the App Store because apparently it's much harder to get on after you're removed. So.
This battle between Apple and Web3 isn't one that's unique to the Bitcoin space. We hear a lot about Web3 gaming apps that have been deplatformed by Apple or are looking at, alternatives because they are experiencing some of the same issues with you. Going through this process, what's your outlook as it pertains to like Web3 apps, crypto apps, and major players like Apple who kind of really control whether or not people use your product?
Yeah, I mean, so we're building all this tech on open protocols. So, this tech works. You can still receive tips from other people from like Android on Damus. So like it's going to be a hard battle if they want to fight like open protocols that are censorship resistant. So I think what they're going to find is they're just going to keep losing more and more customers, and they're going to move to these other platforms that support these protocols in detail. So I think they're just going to eventually they either join us or they lose.
And what's the timeline for that? Because, I mean, if we look at how many customers Apple have right now, it is the majority of the market, right? And once you have one Apple product, it's very likely you have many more because Apple just makes your life very convenient. If you think Apple's going to start losing customers and they're going to start coming to the decentralized side, the dark side, maybe, what's your, when do you think that's going to happen?
Like the optimist in me is like, oh yeah, this is definitely going to happen, being a big Bitcoiner. But in reality, it's exactly what you say. Like it's hard, it's going to take a long time to convince people that Bitcoin is the way forward. So yeah, it might just be like I just have a dumbed down version of my app on the App Store app, and then I work on other Android versions and desktop versions. That looks like that's going to be my path, but it's kind of sad that it's always going to be nerfed in some sense on the App Store.
And so do you consider this a win or a small win for your app and I guess the rest of the industry?
I mean, PR has been pretty crazy. So just the people seem really excited. People really care about what's being built here, like in these decentralized protocols, these decentralized social protocols with Bitcoin integrated. So you can just feel a lot of that passion. So I feel like it's a win just because it's getting the word out there. Like this is what Apple's doing. Maybe we should be fighting this. And then so it's big of a part of a bigger battle that we're fighting. And I think overall it's good just getting the news out.
I do want to ask about how many downloads have you had compared to pre-fight with Apple? I mean, what's been the uptick in downloads that you've had for your apps?
Yeah, so it feels like whenever I get in a fight with Apple, it just like there's all these news articles that get written, and I get huge bursts of users join. So in the past week, I've gotten like 20 to 30,000 downloads, which has been pretty cool. So yeah, I mean, yeah.
You're like the Meghan and Harry of crypto right now, getting into fights and getting down. So that's good. If you have any other feuds, I mean, you do you plan any other feuds anytime soon?
I mean, I don't go out of my way to pick, fights. I just feel like really upset when I feel like Apple's boot is under me, and I just want to build cool stuff, right? So yeah, so I'll always express my unhappiness to the social verse when they do stuff like this.
You don't want to say anything about Elon Musk?
I think Elon Musk is on my team on this one. He probably wants to add tipping to Twitter as well. And this is probably, I noticed he was commenting on a couple of threads by Tim Sweeney on the same topic. So I think we're all in the same fight, even though we're kind of competitors.
All right, Will. Well, continue rallying the troops. Thank you for joining us this morning.
All right, cheers. Thanks, guys.
That was Damus founder Will Kasser. And we're going to take a short break. And when we come back, we'll be looking at the crypto markets as Bitcoin holds firm above $30,000. We'll see you soon.
following investor excitement over spot Bitcoin ETF filings by BlackRock and WisdomTree and Invesco and everyone else, it seems, Bitcoin has kind of stayed flat over the past few days. It's hovering around the $30,000 mark. That might not be by accident. Joining us now to discuss is Tasty Crypto head Ryan Grace. It's a new title, Ryan, right? Welcome.
Hey, good morning. Yeah, we have changed some names around with our corporate structure, so things are moving, but it's nice to see you.
Good seeing you. I was going to call you Tasty Crypto, head of crypto, but then I was just like, no, that's not. You're actually the head of Tasty Crypto head.
Tasty Digital Assets.
It's kind of a very weird. Yeah.
We'll have to work on that.
Yeah. Get in touch with marketing there. Crypto spring, right? Green shoots coming out of the ground. Green shoots all over the candlesticks. What's going on? What are you seeing happening here?
Yeah, it feels a lot better. It's encouraging, I think, at this point. That said, I'm still not convinced that we completely decoupled from some of those more macro drivers. Whether that's monetary policy, it's the idea that the economy is slowing. I don't think we're completely out of the woods just yet. But given the recent news, let's call it the institutional stamp of approval, super encouraging. Would love to see a break out of this range. But just given where we are this year, given how the market has been trading, I think anything in the short term that might be related to another Fed hike, or maybe inflation isn't coming down as fast as we thought or we would like it to, I see those now more as buying opportunities. You have to respect the range. At Tasty, we look at things through the lens of the derivatives markets, through applied volatility, and with about a 60% vol here, you've got kind of a 1 week range that you could see maybe 27.5. So you still trade that 25 to 30 range for now. But I think that you look at some of these pullbacks, if you get them, as opportunities, because it is a lot more encouraging given the institutional stamp of approval we've seen.
We have this $30,000 level here, and that's significant because we have a lot of puts and really a lot of calls hanging around there that expire tomorrow. Tomorrow's the big day, end of quarter, end of half, end of the month. Everybody's excited. I know I've marked my calendars for months in advance for tomorrow. But this is, it's significant. Is that what's keeping prices, at least for now, at that, you have like $5 billion or so on Deribit hanging out there at the 30,000, in notional there. Is that what's keeping everyone around this level for now? And do things get exciting after Friday?
Yeah, I think there's a potential for the market to move a little bit more after Friday. You see a similar dynamic in a traditional market. When you look at derivative positioning, you look at option positioning or those expirations. Granted, those markets are much, much bigger than what we see in the derivatives market here in crypto or with Bitcoin. But there is something to that, not to necessarily get into the weeds with some of the gamma dynamics or how dealers might hedge that or where those positions are. It does have an impact. So it's possible we could see a little bit more volatility. We could see kind of a quote unquote unpinning after we get through this expiration. But I think you're seeing 30,000 hold because of what's developed in the market recently over the last couple of weeks. People are encouraged. I think you have some element to trying to front run the possibility of those flows that you would see subsequently from an ETF approval. A lot of that does, again, hinge on the approval that the industry has not been able to get yet. But should you see that, I think it's over kind of the medium term, it's off to the races. And that's why I think you're seeing buyers step in here when you get these back.
Economists have been calling for a recession for a few years now, and it seems like that call is getting closer and closer. Some economists are saying by the end of the year, some are saying by Q1 next year. Does that change your outlook here on Bitcoin, which it sounds like is pretty positive?
Yeah, my outlook's definitely positive, but I don't think that you can ignore what we're seeing when we look at the yield curve. What we are seeing when we look at some indicators of what's happening in the economy, there definitely are some concerns. I think you have to respect that. That said, very difficult to time. I look at 2s, 10s, look at the yield curve, for example. It's extremely inverted, close to one of the most or the largest inversions on record. Now, that has been the majority of the time, it's been a pretty good indication that there's a recession coming. That said, it's a really wide spread. 6 months to 24 months. We're about a year in since we first were inverted, and we flirted with recession, technically, I suppose, when you look at GDP quarter over quarter. But tough to say. So that still kind of weighs on this. It's in the back of my mind. I think interest rate hikes here out of the Fed, whether you get another one in July, which looks like what the market's pricing in, probably matter less. Inflation is coming down, but I don't think that crypto is immune from a sort of environment where you would see a very strong dollar, where you would see just generally a risk-off kind of sentiment in the markets. And given just how quickly we've increased interest rates here in the United States and really globally as well, when you look at global central banks, there still is that monetary policy lag. I don't think we've necessarily seen it show up. We haven't seen financial conditions tighten to the extent that they might after we're done with rate hikes. And again, that kind of coincides with that same time period that we've seen with interest rate yield curve inversions, 6 to 24 months. So we just haven't seen it yet. So I think you have to be aware of that.
Nonetheless, I mean, we are hearing that banks are tightening their lending policies. They're making it harder. There's fewer dollars sloshing around in the economy. It's like 10% down. The M1 is 10% down. We're seeing, as you said, the inverted yield curve. I mean, everything's pointing to a pretty lousy recession coming up. And do you think that will, this is kind of going to be one of the first major, this is definitely the first time we've had Bitcoin and other cryptocurrencies go through a period of real serious tightening of money supply, et cetera. Is that equation underestimated, do you think? Do you think that crypto markets aren't necessarily counting in the fact that it's not the same as it was? Our money supply is down over the past year. Do you think that they're not really thinking it through?
Yeah, I don't think it's very forward-looking in that sense, but I would apply the same view to what we're seeing in the equity markets. We've seen a risk-on rally here for one reason or another. And yes, I do think that if we should see a continued slowing in the economy, coupled with where we are with interest rates here, then you likely will see some short-term pain. I tend to view that as an opportunity because I think on the other side of that, and maybe this is the larger driver, when you think about the flows, we can talk about the ETF, but when you really think about the liquidity perspective, if we do get into that situation, well, the Federal Reserve and all the global central banks have that playbook, and I find it really hard to believe that we are done stimulating, that we're done devaluing currencies, currencies globally. I think this trend continues, and that's really what drives Bitcoin adoption as a let's say an inflation hedge or debasement hedge, and just largely crypto over time in terms of the price action. I think it's when the Fed puts the pedal to the floor again, and you'll see that should things get bad enough in the economy.
Ryan, thanks so much for joining us this morning.
Thanks for having me.
That was Tasty Crypto Head, Ryan Grace. All right, we're going to continue talking about the markets, and we're going to head on over to Bitcoin Cash, which surged to a fresh one-year high on Monday, more than doubling in value in the week since it was listed on EDX markets. But is this really sustainable, Lawrence? You've been compiling some pretty interesting data over at the TIE. Break down what you found for me.
Yeah, this has been kind of a fun thing, I have to say, because Bitcoin Cash is definitely one of those currencies we don't talk a lot about here on First Mover or even CoinDesk. It comes up every now and then. It has this cult following. I'm sorry, folks. I'm going to get the angry emails. I'm going to get the angry tweets. It's okay. I love you all. But, Bitcoin Cash has this kind of a cult following. And it also has a strong following with people. Definitely, I know a couple of years ago, I had a lot of friends who were, loved the use of Bitcoin Cash on things like Shopify or whatever. Whatever they could do, they or not Shopify, but they were using Bitcoin Cash to transact. And you take a look. There's this chart here. This is over since June 21st, when it was announced that Bitcoin Cash was going to be tradable on EDX, which we had the CEO on. And you see it just soared. I mean, none of the other coins that were on Bitcoin, that are on EDX, took off the way the way Bitcoin Cash did. It's just been a phenomenal return. We'll take a look at, we have some other charts here. I think, let's see, do we have another one there? Yeah, take a look at that. So Jen,
that is wild.
Yeah, that I want you to see what that is. So that's Bitcoin Cash over the past year, and it's just been kind of stuck in this range. To be sure, it's a wide range, right? It was not a small range. We're looking at, I don't know, I'm trying to see here right now. We were at like 90 to 140. Roughly, for about a year. Now you see that little E, that stands for event. On the tie, you can tie, you can combine news events with a chart, and you could actually graph it. And in this case, I graphed the news event of the EDX announcement. Not that they launched, not that it exists, but that they just started trading, and Bitcoin Cash was there. That E, and then all of a sudden just took off. By the way, that chart is old. It's actually even higher now. So that tells you, like, even over the past 24 hours, now over 240. So when I sent that chart in, that kind of, that's a lot has happened since then.
Yeah, we don't see charts like that often. And we're talking about the sustainability of this pump, right? So EDX Markets launched Bitcoin Cash, Bitcoin, Ether, Litecoin on their platform. If we see other platforms follow suit, do you think that we could see another big pump in Bitcoin Cash? Like, is this sustainable? What's the long-term outlook here?
I don't know. And this is the thing. As I mentioned before, Bitcoin Cash has this like. It was a beautiful combination of things. It has this like religious following, and we've talked to Litecoin is also on this, right? Litecoin didn't have this kind of result. There's another chart I want to show you, and that is this kind of what happened in the markets. This is thanks to Josh Frank. He the CEO of the TIE, who he was playing around with this chart. He loves this chart, and he sent it over to me. I think we have it's open interest and liquidations, and this is fascinating because let me explain what happened. As I said, this was like kind of like it was a sleepy market. So for like the past several months, the only kind of liquidations you had were in the tens of thousands of dollars. Not tens of thousands of big. It was like tens of thousands of dollars worth of Bitcoin Cash. So then all of a sudden, with this news coming out, boom, all these short liquidations started happening. Those are those green lines there. And you had some red lines there too, to be sure. Those are long liquidations. People were taking on these sizable positions here. And it went from, and just looking at the long liquidations, short liquidations now. You went in dollars over 7 days, 8 days, when over in the past it was like a few $1,000s. And then our open interest went from $76 million to nearly 500 million, so about 450, 500, close to 500 by yesterday. And what's interesting in that is this. Okay, so when you do it by dollar terms, it's, obviously you've doubled the price. But also you've also increased the amount of contracts. There's there's been 4x the amount or it's now 4x the amount of contracts that are out on Bitcoin Cash than were out a few days ago. This is just a very unique thing. It seems to be isolated in Bitcoin Cash, and you see it spilling. I have another chart here. This is a chart from you're looking at Binance here. This is the Binance's. I think we can call it up here. This is basically the volume traded on Binance. Now, what's interesting here is you have to go back about a couple of years before you saw trades that in terms of on Binance. And Binance is a centralized exchange. It's not EDX. It's not any of that, right? But it still saw itself a lot of volume, not seen in 2 years. It was very exciting all across the board, not just with one exchange. But remember, EDX is a small exchange. Binance, a very big exchange. These numbers, not phenomenal, but for Bitcoin Cash, incredible. This is they can't believe it. But I kind of want you to think about this other chart that I have here. And this is, look, before everyone gets excited about Bitcoin Cash, and I have friends who love Bitcoin. I got it. All right.
People are already excited about Bitcoin Cash, Lawrence. Maybe it's a little late.
Well, it's beyond that. Take a look at this puppy, this thing. Now, all you hodlers out there, you know what I'm talking about, right? There's no replacement for Bitcoin other than Bitcoin. I know Bitcoin Cash people say there's only one Bitcoin, that's Bitcoin Cash. Okay, I've heard those arguments, but look at the chart here. That's since the start of the decade, 2020, January 1st, 2020. Look at Bitcoin. It skyrocketed. Bitcoin Cash sort of followed afterwards. Bitcoin Cash sold off with Bitcoin, and it never really came back. Bitcoin itself, it's now what is it? We're now 4x since the beginning of 2020. Bitcoin Cash, just about where it started. It's not that exciting in that terms. And then if you look at finally, you want to look at the overall ecosystem to kind of think of just how big Bitcoin is. Now, these are crypto. So this is a basket of cryptocurrencies tracked by the TIE. So it's Bitcoin is the dominant one. We don't list Ether here. Ether gets listed with the layer ones. This is sort of just sole cryptocurrencies. Number 5, Bitcoin. So it's Bitcoin Cash. It's still small. It's a little guy. It's doing its best. People like using it here and there for transactions. It's not taking over the world. And I kind of want to remind everyone what was said. On here, it was actually on First Mover. We asked the CEO of Jamil Nazar Ali of EDX Markets, and we said, okay, why Bitcoin Cash? And he said, look, he said there wasn't a high demand for Bitcoin Cash. It had nothing to do with people saying we need Bitcoin Cash to trade. It was simply because it was a derivative of Bitcoin, and it was one of the few currencies that they knew would not get in trouble with the SEC. So that's kind of what that whole thing was about. It wasn't about demand. It wasn't about institutional demand. Yes, now there's one more place for it to happen. But overall, the demand still
for us, and painting that picture, I'd say the takeaway is Bitcoin Cash is not the same as Bitcoin here.
Don't tweet me. Don't tweet me. Please. She said it, not me.
That's part of the job, Lawrence. You're going to get tweeted at, and you just got to take it. We're going to take a short break. Coming up, 6Clover CEO joins CoinDesk to discuss its newly announced cross-border crypto payment system. Stick with us. Good morning and welcome back to First Mover. Digital payment company 6Clovers is launching a new Web3 cross-border crypto payment system called the Versal Network. Joining us now is 6Clovers co-founder and CEO Jim Nguyen. Welcome, Jim.
Hi.
All right, let's talk about the network. This is going to allow companies to transact in stable coins and CBDCs. Tell us about your mission.
Great. Our mission is to evolve cross-border payments to support new asset types. which is stablecoins and CBDCs. We enable business to connect to each other and transact in digital currency. We see that, in the current world today, companies are moving fiat based on existing rails. But as new assets come about, digital assets such as stable coins and CBDCs, it will require a new payments infrastructure. And that's what we're building. We're building payments infrastructure to move digital assets, particularly stable coins and CBDCs.
Are you working with any governments or stablecoin issuers right now?
We are working with stablecoin issuers, but not with governments.
Which issuers?
We're working with both USDC as well as USDT, Circle, and Tether. Yes.
And who actually is using the system right now? You just launched, I know, but exactly, is it set up? Is it up and live? And who's using it?
It's up in the system today, and we're working with companies like payment service providers, as well as businesses to transact in digital currency. So it's the same business that move fiat today for their customers. We work with those folks to expand their capabilities. As you know, payment fintechs today use existing rails, whether it's they want to expand to new asset types, and then that's where they're integrating with us to be able to send stable coins.
And this is built on the SWI blockchain. Why that one?
Yeah, so we're a multi-chain. Versal Network is a multi-chain product. We just launched today on the SWI. We want to give interoperability is a really key issue right now, right? So we want to make sure that we want to give the consumers as well as businesses a choice. So if you want to send an asset on a certain blockchain, we want to be able to support that. So having high performance blockchains on our network is critical to that interoperability vision of ours.
So you guys have been fairly quiet over the past couple of years. Forgive me if I'm wrong, but I mean, you've been kind of under the radar. I don't think you guys have even so much as sent out a tweet in 2 years. What happened? Yeah. Like what was going on internally? Were there any internal changes? Anything happen in the interim?
No, there's no internal changes. Building payments is a difficult process. We wanted to really, we're building a enterprise grade payments infrastructure that's compliant, right? And building systems like that does not come overnight. It requires, not only you have to take care of existing Web 2 requirements, but also we have to tackle the Web3 challenges, right? Multiple blockchains, multiple assets, interoperability. How do you make all that work together, right? It's launching a website where you have images is very different, but these systems need to be really hardened and they need to be tested. So we've been deep in build mode, and you should hear some more news from us coming out soon.
On the interoperability piece, any security challenges you're facing as you think about this? This multi-chain interoperable future for the company?
Security is top of mind for us all the time. We've designed the system to, really reduce the attacks and surface area. But that's something that's constantly on our mind. Fintechs, it's very interesting. Fintechs is really, we want to be at the, on the far right, which is the most innovative solution, but also on the far left, which is reliable and secure. So where we have to balance is, hey, oftentimes we may have to we have to really dial back on innovation to really afford security as well as reliability, right? So that's what we focus our time on right now.
Now, you guys, of course, you're probably not the first in this space. Everyone always wants to say they're the first in everything, but of course, you're not the first here. And you also have the big players like MasterCard coming in, looking to do kind of a payment system using, a tokenized bank and the deposits, and you have all sorts of things. So what's your take here? How do you see yourselves competing with these very well-funded large players? What are you offering that's different, and are you looking to even be an acquisition target?
That's a great question. So, fintechs, while there are multiple players in the space, we sit at the very lowest level in the stack, so to say. So our technology can be embedded into any company that wants to move digital assets, stablecoins, right? So at that level where, we can work with MasterCard or Visa and folks like that. So, our goal here is really to be additive to the fintech community as a whole, and then really, as well as really creating a differentiation. In terms of where we see fit is that there are various use cases that we focus on, and those cases are really about how do we enable cross-border payments, fast, cheap, and really reliable, and really auditable on-chain audits. Those are the things that's not available in the past, and that's what we want to do here at 6 Clovers.
Jim, thank you very much for joining us this morning, and congratulations on the launch.
Great. Thank you.
That was 6Clover's co-founder and CEO, Jim Nguyen.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
In its first legal response to the SEC's lawsuit, Coinbase claims that crypto assets listed on its platform do not fall under the regulator's jurisdiction. Well, joining us now to discuss is Coinbase Global Policy and Regulation Managing Editor Nick Day, who is also the editor of God's favorite newsletter, CoinDesk Crypto. State of Crypto newsletter. Good morning, Nick.
Good morning.
Okay, what's going on? Real quickly, why? Because I chatted too much in the previous segment. Walk through the Coinbase's response to the SEC lawsuit.
Yeah, so early this morning, Coinbase filed its response. It filed an answer to the complaint to the SEC, basically going on a point-by-point list through every paragraph of the SEC complaint, and then either saying, okay, here's what the reality is according to Coinbase, or we don't admit to any wrongdoing, or things like that. It's tactic we've seen from previous crypto companies, including Kick, and I think Ripple did that as well back in the day. But basically, the gist of it is Coinbase is alleging that the SEC A has done no rulemaking, B has had public officials acknowledge that there might be a regulatory gap for crypto assets. Noting that Congress is looking at it and pointing to statements by Chair Gary Gensler in the past, indicating that perhaps the SEC doesn't have jurisdiction over cryptocurrencies, and it's using these arguments to say that the SEC cannot have brought a lawsuit against the crypto exchange. Other complaints include, they're claiming a lack of due process and, question about the major questions doctrine. So basically kind of tying up everything we've seen in public statements into one neat little package for the court.
Coinbase alleged that in another document that the regulator violated its due process. Just unpack what that means for us. What are they getting at here?
Right. So this kind of goes back to the allegations that the SEC is overstepping here, but Coinbase is arguing that the SEC has had numerous opportunities to interact with Coinbase. That Coinbase has sought regulatory guidance and such, and the lawsuit came as almost a surprise to them, or at least a Wells notice, back in March.
Nick, thank you very much for joining us this morning. Always a pleasure. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Lawrence, that's a wrap for First Mover today.
Yeah.
Thank you. Our audience, thank you to you for joining me. We will be back tomorrow. at 9 a.m. Eastern Time. You're watching CoinDesk TV.
Hey there, happy Friday. Welcome to the Hash.